Okay, let's get this going. Other tickers. Unity. Goodness gracious. Oh, I have to check some stuff out today. Good morning. Good morning. Hey, it's been a while. Maize and Blue too. Keith Miller. Good morning. Around 319. Yeah, I think AMC that's kind of first step actually. It's a that 318, 317 area was a support back here. So you can see that, and then the 321 I had marked off. I don't think this is that complex. It's pretty straightforward. We've got some right above us. We've got some overhead, and really there's just a ton of little resistances that may or may not be a problem. When you look at a chart like this, and if it's not quite finished a full S curve, and that's what happened here on AMC, is it kind of went down, started an S curve motion here. And by S curve, you might see two. You might see this one here, and then like a shallower one off to the side over here, and down kind of a bit. And that's fine. But what I'm talking about I'm usually talking about the major motions, which are these guys. So one is a support. That's like the first ear right here. And the second is a resistance. That's the second ear right here. So you can see that when it started to go down, it looked like it was going to go into a full-on S curve all of a sudden. And I had measured it out, I mean, just to do it. And we said, 270. It wasn't on this chart, but I had marked it off. Like 270 area seemed like the most likely area that it was going to go to. Still could go down there. I mean, in theory, if this doesn't make a higher high, it's not there yet. It could be there as soon as 30 minutes from now, but because it's right up at the top. But if this doesn't make a higher push here, it hasn't rotated. It hasn't turned around. So bears can kind of walk a chart back up if they're covering, as in to go back to retest something. And like right now, I had marked off 308 because 308 was this really important level back here when we broke out. It was where we jumped over and we held above. We closed above 308, which is above this creek level here. You can't see it on this chart, but it's right there. And I think that's still a bit of an issue. So there was two hits on it coming down. We have one spike to 310, another that goes up pretty high to like 314. Now those would be like distribution type areas, those little wicks going up. So far so good. If you look at the kind of the meat of this drop down from where it started, which really is like right there, we are above like a 50% retracement in this range. So it started up here at 315 and it dropped down to 284, 283, and then you can see right here that's the middle, and the middle's right at 299, which is 3, and that was easy enough to pick out because they used it as an anchor here. So $3 is a really easy number, obviously, and that's just a logical place to kind of build a support. And arguably, we could look back and say that 3 was the true support back here as well. Although I like to use the wick extensions, and I like to use wherever it takes off from. So I was really looking at 308 because that's where it jumped over and took off, and then maybe 3, as the two bottom supports here. This already is got signs of weakness. meaning that it did push down. It spent a lot of time coasting above 296, dropped it. If it holds support on 296, which it did back here, it kind of built a little support on Monday and Tuesday back in the 290s area, then you should be okay to advance. But I'm still going to have to sort of like hold on to the question mark until it pushes above like 310 here, which is, again, it's 2 cents away, could happen in the next 10 minutes. That to me would signify that we are indeed pushing up, like there's pushing of resistance. It's very, very important when I look at charts that we're consistently making, especially on like a shallow S-curve where we didn't get like a definite bottom, we kind of stopped short, bounced up. It's very important that we make those higher pushes. So we did right here. This was the second ear. You can see there's two on this breakdown. All right. So there's always like a paw, which is like the initial reaction. If you're going down, if you're going up, the paw might be the buying climax. If you're going down, the paw might look more like a auto reaction. And then you've got the two ears, which are the breakdowns. And there's weaknesses in there, just barely, but they're there. This one was a little tricky because we didn't push low till like the last minute, so it kept kind of the bottom intact, which is interesting. This is like 296, 296, 296. It didn't really break it until the last minute here on Wednesday. It kind of popped through it and then dropped all of a sudden, all in one kind of motion. So anyways, so the first level that was acted as a resistance here, if you're looking backwards, going back in time, would be the 301, 302. We did push over that. So you can see like we kind of hit that creek. You can see this is like an extension of that creek right here. It's like still that resistance, and then we pushed it. We pushed up to 305. So if you're watching this and you're like wondering like, is it bearish, is it bullish kind of thing, you're kind of trying to play it out. That initially would be a bullish signal to some degree because you've broken the first creek here, right? So you can see how like that extension, I'll just use the same one, leads you to a resistance push, which is good. And then there's support built on it, and then it pushes up again. So that's a good signal, but I like to use kind of the middle, especially since it's right there at 308, that middle spot on those cat ears especially is really important. And so in order to kind of confirm this is turning around, you can see that these two did generate kind of a downward motion that appears to be broken at this point. Like it seems like that creek going across is broken out. Great, big plus, definitely a bullish signal. Still, did it make a higher high yet? Well, the first one as part of this creek, again, that we're looking at, and I'll just make this one thing so it's not super confusing. The first one is again, we've already pushed over 303, so the next one up, which I'm calling the first one now, is 310, right? So in order to kind of confirm that this is indeed trying to build an uptrend, we need to start making higher highs. So that's going to be the next big level. It's pretty straightforward, right? And again, because of where that is at that 308, it's kind of like doubly critical. So I'm not really too concerned about the next one up, which is like 313. I genuinely don't think it's going to be much of an issue. I think if you can get above 310 here and hit like 311, 312, and at some point push that resistance, then you'd be in good shape, right? Now, in a bear scenario here, which I don't want in this particular case, what might happen is that you don't make a higher push. You just kind of reject off this top. If at that point we start sliding down and we do not hold this creek level at like 3, then it's bad news. Bad news bulls, really. Bad news for the bulls, not for the bears, because you have a lack of push. There's a lack of a higher high, and then you have a break of that creek, and that would probably send you right back down to the bottom. And frankly, again, looking at the larger creek cross here, you can see that could drop us pretty low. You know, if we went down maybe as a result of FOMC, for example, this afternoon, we could be going back to those 270 areas by tomorrow. Totally possible. That's not what you have on the chart here, Booksy. You're thinking it's going to go up. Yes and no. Yes, because that is what I thought. No, because I kind of expected we would punch into FOMC higher. Everything that we've been doing is fine, on the grander scheme of things. It's like, yeah, we've made some advancements. It's a very weak advancement. I'm on the 15-minute here on IWM. On the 4-hour, it's a little bit of a better picture. You can see that on the 4-hour, the MFI already got overbought, which is kind of crazy because we really haven't gone anywhere, And if you look at the MACD, it hasn't crossed up yet on this 4-hour, which is really the grander bullish signal. Usually, and just again, as an example, usually you see that cross up happens as you're breaking out of some creek or EMA. That's typical. So I'm not so worried about the MFI being a little bit overbought as I am about the fact that the MACD hasn't crossed up yet on that 4-hour. And you can see back here when it did on January 15th, it was just approaching that 180 EMA. And then when it breaks out here, it pushes up above the 180. Doesn't have a massive extension because we're already kind of getting into overbought territory on RSI, MFI, things like that. So my bigger concern right now is that we just didn't really go very far. We're really not high at all. We're very low still. We're struggling to kind of push over this latest creek zone. We're a stone's throw away from a distributive action right now. If we drop back down through like 203.50 on IWM, I think it's probable that it's going to just slide pretty far. Like we can go all the way back down to 199.50, that kind of thing. And again, looking at the bigger picture, especially with extended hours, it's like we didn't make that higher push here. And more so on IWM because it didn't even push over this first little marker, which was like, what was it? 206.22. It only came up to 206.02. So bit of weakness there. Now, is this crossing up? Yeah. Does it look like it might hold this creek? Yeah. And I had even said, this looks like I almost looked like it faked it, but this is actually what I drew because I figured that if it came up, it needed to come back down to 202 area and back up before advancing again. There's a number of reasons for that. I don't want to get into like every single one of them, but let's just say because it was that floor that was turned into a resistance for now. Let's keep it at that. There's more to it than that. That 202 area has been historically very, very important for IWM, but that's the Russell 2000. So anyways, when I look at that and then I look at where we are on AMC, I'm kind of like, all right, if we get some kind of a pump this afternoon and it doesn't drop and go the other way, we're kind of on I wouldn't say we're on like a bad footing, but we're not really like in a great spot in terms of indications. Like the volume on AMC is pretty weak so far. We're just kind of getting turned up here on this, and it hasn't even gotten close to the 4-hour cross up on the MACD. Everything on AMC has a little bit more room to run than like the broader market, which is good. And that does give me some hope that if we can get this advancement early in the day and then maybe back up in FOMC, we should have a good chance that this is going to pop and go ahead and head on up to that 335 zone, which is kind of the first big stop potential here. Now, there's a lot of different options going forward. I did a lot on Discord yesterday, and the day before. So if you want to go and check that out, check it out, because I don't really want to go through every little piece of that right now. We still have a decent amount of bullish divergence. You can see here, this is a good amount of bullish divergence coming into this bottom on MFI, RSI, MACD, not OBV, but that's okay. We'll get to OBV in a minute. And I think that's all pretty good. Like, that's all positive. Again, there's a great indication here in my mind, and I already kind of knew this, and you guys probably already knew this too, that this was really pushing down extra, sort of like on a weaker sell-off, especially on AMC. It had already had this really long-term sell-off. I would say the sell-off kind of priced in a lot of stuff. You had this kind of so-so earnings report that he announced he's not going to dilute anymore. So you're kind of like, all right, well, now what? You know? Or he's not going to dilute for the rest of the year, whatever he said. And you're kind of like, now what? You know? Well, the market just kind of sank after that. I mean, this is really when we start seeing at the mid to late February that market really starts sinking. And so the AMC just kind of follows through on it. And I don't see a lot of volume here at all. This doesn't look like selling climax at all to me. This just looks like a weird, like, we're not going to invest in it kind of motion where we're just going to see how low it gets. So I had already kind of felt like, well, this double bottom, there's these two lows here. We're already kind of turning it around, which is why initially I thought this was probably not going to go down again. I figured it'd just kind of hold up and go. And instead we made it like a deeper retracement, which is fine. Again, you can see why, like, I would have thought that maybe it would have held. If you look at, like, for example, MFI right here, like, it seemed like it crossed up and it could have held right there and it didn't. I remember we talked about that with GME too. It was like it actually did recapture. I mean, it was in a position where it could have, if it would, no one would have been surprised, is what I'm saying, if it had run back here in late February, because it was in a position of like, okay, well, it's crossed back up and over. It hasn't really broken down yet. Everything about it was like so-so, but it looked pretty bullish on indicators, and then it just went the other way, you know. And I don't know, sometimes that happens and there's not really much I can do about that. It just is what it is. So then you look at it and you're like, well, now at this point, it's completely out of this lower structure. It's already jumped a major creek. It's backed up far. And now it's like testing the more local one. You can see right there. And it's there. I mean, and it wouldn't be any different if we had drawn it over here versus on MFI versus MACD. I mean, it's all kind of the same. There's a sense in which we made a big creek jump, we backed up, and then we just didn't find support, so we backed up some more. And the volume is just not, again, it's just really not indicative of anything particularly great, in my opinion, buying and selling. Like, it's just very odd. Low volume sell-off, low volume buy-in. I mean, everything about it's just kind of meh. So, not an easy one to read as a result. It's easier when there's like a high volume sell-off, you know what I mean? Followed by a breakout, you're like, okay, it's going to go. But when it's just this low volume stuff, it's like, somebody could easily interpret this as distribution if they wanted to. I feel like the double top makes it a little muddied. And that's really important, that double top at 377. I don't think it signifies necessarily a distribution. This could be a larger auto reaction with an SOW, in which case you could have a move that goes beyond that auto reaction, which is kind of what we've talked about previously. And this is a widening, if you have interest in that, from December 12th forward. There's a bit of a double top, then it hits a bottom, and then it comes up again. This could be another double top moment. If it doesn't go beyond 330, it's a double top kind of moment on that widening. If it does, and I think it might, then I don't see why we don't go all the way back up to where this started, which is 406, which I took some flack for from a few individuals, not a lot of people. I mean, I don't get a huge amount of people on this stream anymore, but I took some flack from a few individuals about that $4 call out. And I was like, well, 377 is pretty dang close, and we saw it turn around. So I don't really know why you would have held through this, you know, necessarily, but I understand why they said, you know, hey, that wasn't right. What I said was, like, frankly, like, we don't know that it can't still get there. If that target was in mind and we're just taking a detour, I mean, that happens. It's not fun. It's not pleasant, especially if you're playing options. And I did. You know, I got kind of a couple different losses right here because when we were building out, to me, it looked like it was going to go. And it didn't. You know, you take those L's, you move on, and that's all there is to it. We're in a position right now where, like, timing is very, very, let's call it on a razor's edge, right? I mean, you can have it break today, easy, run up into end of the March time period before that April 2nd decision, and then crash, or vice versa. And I think that's a very strange thing to think about because we don't really know what's going to happen. We don't on April 2nd. We're not really sure. We don't know what the Fed's going to say today and how they're going to respond to all the stuff that's going on. There's a 99% chance that they're not going to do anything about rate cuts. So if for whatever reason they became very, very, very hawkish or very, very dovish or something like that, that could shift the market. But right now they're just kind of flat, like stagnant. That's the expectation, is like we're not going to make any changes essentially. So I would be on the lookout, and I will be this afternoon. I'll stream during the FOMC stuff. Be on the lookout for that and just kind of listening to see what happens. Most people think there's a 60% chance for a rate cut like mid-year, around June, July. And I think that's going to really, for our purposes, I think that kind of reinforces the thought that this is probably going to be a May, June setup, not a March, April, May kind of thing, which some people are thinking like, oh, it's going to blow up right now. Man, it would be a big surprise if he suddenly says, hey, we're going to go ahead and cut rates. We're ready to do it. That would be hugely surprising to the market. Based on what he said, that's very, very, very unlikely in my opinion, because he's already said repeatedly that we're talking about Jerome Powell, that he doesn't know how tariffs are going to affect the economy really, and they're waiting for it to shake out. So it would be very, very strange, I think, to see that happen. Yeah, but who knows? I don't know for sure. So anyways, AMC is pretty simple today. You really just want to see it push, I think 311, 310. We're kind of right on the edge again. We're at 308. We're just kind of sitting there. I think if it makes that push, there's not really any, in my mind, there's not really any reason we can't go ahead and advance. You might expect there to be kind of like a pump and a dump here. I don't know, like a push and then a pullback. I don't really have that on the chart. It just kind of looks like it goes up. We'll see. If it doesn't make the pullback immediately, then mark it off 308. So we'll probably have to come back and retest it. GME is kind of much the same way. When we were watching it come down, it was very clear that it was iterating, and it actually had a very small, subtle move above the creek here that, again, on indicators, maybe not this time frame, but on certain indicators looked really strong. It's the exact same timing, basically. It was right at the beginning of March as AMC. A little bit more heavy selling, perhaps, than AMC. But at the same time, this isn't exactly like super, super high volume. This really looks like a very big buy-in with a kind of a low volume pullback. That's like a 618 or something like that retrace. Maybe more like a 786 if you count it from like the 20. I haven't looked at it. That might even be like 854 actually. But anyways, so originally we thought probably going to hit 25. And then it bounced out, failed to advance. And then you're like, okay, now what? And we talked about coming back down to maybe this 2160s level. And it did hit pretty low there. And then at lowest, I think that 2030 area to 2060 area. Right now, has it advanced out of this particular structure yet? No. The way I do these advancements may be a little bit frustrating because you're like, well, when do you finally buy in? Well, I'll tell you right now, if you follow this pretty closely and you're really paying attention to these waves and where the bigger ones are and where the bigger creeks are, it always lines up, almost always lines up. And right now it's lining up to be more of like a Friday to Monday kind of thing, which is kind of a bummer because if you did have options for this week, at least for now, yeah, there's a chance it advances before then and gets above, but it certainly looks like they're going to hold out on GME maybe even until Tuesday, which is kind of unfortunate. I really was thinking we would be running up into that time, so I had it mapped out that way. We will see. That anything could happen this afternoon. I think today is going to be a pretty pivotal day for the market. But if it stays pinned beneath 2450 area, then today especially, then I don't know if I'd be banking on it advancing this week. I think I'd be waiting for next week for GME because just the way this is set up, like it didn't look like it was necessarily on this wave going to advance. It has to kind of break above 2450 in order to really get that advancement. So this is going to be a bit of a mixed bag for GME because it might look like it's advancing if it hits like 2460 or something, but there's really no way to know until, again, it makes a higher high. And it has to come all the way up to 2520, this area, to start really pushing. So I have a couple markers on here, but that's like the breakout zone. Once it gets there, you should get a straight shot. I mean, it really won't be, in my opinion, it will not be. This is kind of the pinnacle of the other wave, which is like the bigger one. It's essentially like the fastest point in that wave, like the steepest point in that wave is coming up right at that intersection around Friday. So in my opinion, if this is going to go up, really Friday into Monday should be like the speed zone. And I think you're going to have it go as fast as it's going to go. Now that's some pretty specific timing estimations, I know, but in theory that's correct because this would be like the pinnacle of speed right here in this pocket. So you would get a pretty massive move. So if you can time it right, if you can see that push up and then it holds above 2450, I think you're going to get a good maybe 10% move to the upside. That's pretty likely. If it cannot make that advancement, then be careful because sort of the same move is implied down. I think there's a very similar kind of setup to the downside on the lower creek. And this is usually where you see those options moves where there's like, here's the implied move, 10% up or 10% down. Yes, this one's pretty obvious because it literally is like flipped on its head right here, right around 24.5. So 10% up, 10% down seem very, very, very likely in my opinion. I don't know. Lately, I do go back and look at like financial analyst targets and stuff like that. And I'm like, okay, they're basically saying the same thing. I'm not going to do that for GME, but if you want to go look them up, there's usually like an implied move around earnings. I'm going to guess it's 10 to 13%. I'm going to guess without looking it up because I can see it here on the chart. That's where the creek is low and then high. It's like the same move. And it's all going to hinge right there around that 24 to 24.50 zone right here. I don't know. If we can get a pop today above it and come down on top of it, I think it'll be more bullish for Monday. You asked about FANG, Momo. I do look at FANG kind of often. It broke out today. I don't know if it's going to hold. We will see. Obviously, I had marked this off previously, and I think I put this on the Discord. I know I did. I'm like 99% sure that I posted this well in advance. And I know that one guy, I'm forgetting his name right this second, so forgive me, because he's terrible trader. It sounds horrible to say that out loud. But a terrible trader asked me. It sounds like I'm describing somebody. Yeah, I thought I posted this. Let me double check. But he said that he missed it, and I was like, well, it was a quick move through that area. I mean, it took a couple days, but I'm like pretty sure I got this one well in advance. Because we talked about I don't know where it is. Man, I would be really bummed out if I didn't post it in advance. That would be really crappy of me. Because what I talked about is like the way this was set up, and I'll just kind of be talking about it while I'm looking for it. But the way this was set up, and it may be hard to see, I got so many lines on here, I know. But if you kind of focus on that downward trend, the way this is set up, there's a cat ear downward trend there that has a very simple like midpoint kind of breakdown. It's on the middle of this downward trend. It always hooks on it and then breaks down. When it drops low, it creates this trajectory in, trajectory out, and it was the same trajectory every time on average. 1, 2, 3, and then 4. So I added the fourth one over here. But But then I looked specifically at like where those ears were pointing at the top and those intersections on the bottom. What I found is that there was like a buy zone, which is this yellow line coming down. And every time it hit that, bounced back out and landed in that buy zone, it took off. It was like a retest on the floor that didn't go backwards. So I marked it off and I said, I think there's going to be a buy zone like rebound here, that it would be right around 145, and that would be the best possible buy zone for this. And so that was definitely, I don't know. I know it was something I did in advance, but I also know, like, when I post stuff on the Discord, that sometimes it just gets kind of lost in the fray. And I don't expect people to necessarily, like hinge on every word or something. I get it. But there's a reason, like, I try to post these things. This was on 3/7. So this was about 12 days ago. So this is what I marked off, that there should be a buy zone here, right? It's the same exact chart, buy levels for rebound. So I marked it off right there, that once this found support, it looks like I was thinking around 145s, that yellow zone again, and it did. Now, the first time it pushed up, it actually went back through it, which on my chart would have looked like it broke, as it broke down through the yellow. But then when it came back up, you can see right there on Friday, the 14th, it actually held 145.20, and it kind of wicked right to that bottom green mark right there. And that to me was like the buy-in. And so I knew that if this came down low and then rebounded right to there, it's going to be ready to go based on the history of this thing, that buyers would step in. Now we've got a 4-hour cross on MACD here on the lighter moving average. The heavier one hasn't crossed up yet. I don't see this as particularly bearish anyways. Like I've said this previously, I thought this was a really bullish chart. I was surprised it went as low as it did when it did. There's really no economical reason for it aside from the OPEC increase in oil production, which would create a surplus of supply, which drives the price per barrel down, which is good for consumers, maybe not good for a producer who's trying to make more profit. But at the end of the day, like, there's nothing about this administration that's not pro-oil. So like, Fang is a US-based oil company. Like, it should be doing well, and it had a really killer earnings, really good outlook. Based on this setup, the biggest danger that there is right now is this line. So I know that I just said, hey, it broke out again. Well, it did. But here's the thing. When you look at this on the big picture, right, this is going to be a very critical moment because it has to kind of cross back up and over this marker. There's a series of parallels, right? And as it's walking down, it's kind of respecting these as it goes. This particular set of parallels that we're on harkens all the way back to 2021 levels. So again, I'm zooming out so you can see it a little bit better. But you can see what I mean. Like, this is a wave that was set up way back, and we're kind of sitting on the middle of it right here. And if it drops, it's going to drop considerably. I think it could drop very, very far. So if this comes down again, and I have it marked off because I think there's a creek there, this is still very possible. In my mind, I'm like, yeah, this is possible. This could come all the way back down to 126. Even though this is, in my opinion, a very bullish company, there's really no reason for that. It's way too low in terms of valuation. It's like over $100 off the average valuation for this company. That's insane. That's insane. If you think about it, that's like almost doubling, in value, which is crazy. Do I think that could happen? Yeah, I think if the market continues to slump, we might see that. When you start looking at it from that point of view, it doesn't seem way out there because there's an indication right here that this could be a weakness, right? Because it punched through that level. Now we've got a lower move here that's possible. I'll try to make that like a different color. right there. Like there's a new kind of lower slope trend, right? And there's just a lot of indication here that you could end up coming right back down by earnings time in May. Again, May being the pickup period. If this is kind of a dead cat. If it's not a dead cat, shoot, man, we should be breaking 175, heading up to 200s. Easy. So right now, is this a good investment? Well, it's a mixed bag. I think the only target I would look at here and say, short term, I mean, it's a mixed bag. Because the only target I'd look at here and say, well, this is a pretty likely target, is on this widening. If this widening breakout holds, and so far it has, right, this should be a reversal back to where the widening began, which is around 165. Well, 165 is where that EMA is on the 4 hour. It's like right there. Okay, maybe it goes a little higher. It could push as high as near 168. I think that's possible. I have that marked off as a possibility. So this is all kind of speculative based on maybe what happens around FOMC. I would say that this could be moved over a bit even, like right here, going into the end of March instead of April 2nd, right? And that totally seems possible to me. So if this holds, big question today, then going into the end of the week or what have you, I think it's very likely this could hit 163 all the way up to 168. Okay. So that's just only based on the widening. That's a widening target. It makes sense to me that it would go back up there and retest those levels anyways. I don't even know why it is as low as it is, but right now it's back to where it was right at earnings. So long term, that parallel may not be as I say short term, that parallel may not be as important as this one, which is a little steeper. So this is going to be one that I think we're gonna play into quite a bit. So again, maybe by March 27th we're gonna be hitting 165s, and then possibly a bit higher. But that's about as far as I think I would take it. I mean, there's no real reason from a widening breakout standpoint that it necessarily has to go higher. If the level here on this trend holds, the first trend, it should be heading up to 170. If the new trend holds and you can see it, it's probably going to triangulate. Yeah. Then it really doesn't go beyond that point, which is kind of a bummer. But that's like the turn down in the market at play. Like it's generating like a lower channel, and then that builds out to kind of get you down here. So you would then drop low and come down here by earnings. And again, it's not warranted, but it's just what the market would do in a sell-off period, so on and so forth. And I think that gets you back to a creek retest for whatever that's worth. And there's a gap fill. The lowest possible gap fill is at like 125. So all those things could come into play in the future. But for now, I'm really just watching to see if it can get up to 164. I got to be honest, this is a great play for like shares, but I haven't really found, unfortunately, when the market turns sour, all the bull options just evaporated. Like there's no volume anywhere on most of them. So I don't think it's a very good options trade, unfortunately. In a bull market, this has some really strong option trading. It does. In a bear market, not so much. Or let's just call it a turn. It's not quite a bear market yet, but it's a, what do they call it? Bear market's like 20% drop, right? We've had 10%, so it's a correction. Might get to a bear market, okay? May still see more downside. All right. I think this was just an alternative because I was looking at what happened back here. So if it went up into FOMC and then dropped, it could still have a bounce here, 143. We'll see. Yeah. So I'm kind of short term. If this continues to hold, I'm bullish going into the end of March, next week or so. Longer term, I'm very skeptical that this continues to run. which is unfortunate. I mean, I obviously really wanted it to go, but it is what it is. You know, this is showing a lot of lack of resilience. And I said before, I don't really understand it for FANG for fundamental reasons, but also because this was already in a market correct. Like, this is already in a correction phase. This had already been coming down for a long time. And so I'm like, why, you know, this is front running the market. You may see this come up before the market does, but it just seems odd to me, you know, from a wave perspective. But I would say at this point, unless this is some kind of a spring and it just kind of holds here again around maybe the 150s or something, I don't know why it wouldn't go all the way back down to 125 at this point. So, mixed bag. Anyways, locally, still got the widening, and it did break that today. And then really for me, if you were trading this, the best buy-in would have been here around 145. And it's a good trade. It would have been a 10% trade even with just shares. There's nothing wrong with that. That's a very respectable trade with shares. It's a very good trade with shares. Options, I don't think you would have gotten much out of it because I haven't. Like, the options contracts are just kind of dead. It's not that the value shouldn't be going up. I think it should be. It's that nobody's convinced this is going to keep going. So if you had like short-term option trades, you might have gotten something if it were like really shallow, like 150s or something, or in the money maybe. But when this started popping, like I had one, I bought 175s thinking that like when volatility picked up and it ramps, that it would potentially kick in. I went above the strike that I wanted because I was like, well, maybe 165, you know. But normally, like, that works for me because normally if I go a little beyond, I can get them for cheaper. And when the volatility kicks in, you get a good sell-off. But there's nothing. It's like completely and totally dead, which is really a big bummer, I think. You know, it's certainly not what I wanted. I'll tell you that much. But there's just no volume. Like, nobody wants them. So, unfortunately, I know it sounds horrible, but I'm going to say it anyways. Unfortunately, there's no quote-unquote dumb money, I think, in FANG. You guys are like, what? I don't want to be mean about it. It sounds like I'm being mean. I'm, like, separating myself from people like that would maybe consider that. I'm in that group, but there's something about that where, like, if there's a lot of people who are really buying into FOMO and stuff, it tends to be a lot easier when there's a ton of retail involved in a play to buy and sell contracts. It just is. And when it's like heavy institution plays and there's not that much retail involvement by comparison, maybe that exposure is lower. I don't particularly find the options to be very helpful, unfortunately. Like, I made money on these, but it's always been the same, where like the bid and the ask spread is like pretty far apart. And yeah, it's kind of a bummer. Anyways, so, yep. So yeah, it doesn't make any sense to me because I'm like, I don't know why this wouldn't have grown, but it hasn't. You know, because from that bottom, which is where I got some of the lower ones that I got, it's already up 20%. The options haven't budged. That means that nobody believes it. Yeah, do I think it stops the pump? This isn't much of a pump. But yeah, I mean, in general, I guess so. You're so mean. I want to be able to make good money in the market, but if the market's not moving, like in options especially, if they're not trading, then you're in a bad spot. And unfortunately, like, that's happened to me a couple times already where it's like I have a really good idea of what's going to happen and it happens, but there's no follow through. Like NU, it did that with NU, and I didn't make almost anything on those contracts. It doesn't make any sense to me. The stock ran, honestly, it still doesn't make sense to me. The stock ran some 20% or something ridiculous. It wasn't maybe that high. I think at first it was like 10 to 15%. And there was no change in that valuation. And what's crazy is that it didn't stop. That after I got out, it continued to run like another 10-15%, which tells me that there was commitment in the market. But that just means that the options chain was just dry. Like there's just not a lot of people trading those strikes. There weren't a lot of people that were interested in that trade, which doesn't make sense. Because I was buying and selling at levels that technically ran into the money and stayed in the money for a long time. Like it should have been a profitable trade in theory, had the options chain been healthy with a lot of volume. But it just wasn't. And I'm learning that, unfortunately, the hard way this first few months of the year, because this bearish turn down has made bullish options just kind of horrible. Even catching these bounces is just, there's nothing to it. There's no benefit in it. In a semi-bearish market right now, it's like, again, it's not a bear market yet, but it could be soon. But yeah, it's just kind of a bummer. And I just don't remember it being that difficult to make. So I'm like trading IWM. It's the same thing. I had bought in really low here, really low on some 220s. And you're like, well, yeah, but it may not even go to 220. It may only go to 214. Yeah, I know that. But that's even IWM. It's like a really high volume trading. But it's about what people think they're valued at. And there's just not a lot of commitment there. So you have a lack of enthusiasm, I should say, for those. By the way, I'm going to start looking at stuff like this. I got to be honest with you guys. These things are super, super dangerous. So be careful with this kind of stuff. Be very, very careful with it. But in an effort to kind of maximize gains on a downward market, when I'm seeing bounces and I'm like, I want to trade it, but I'm not getting that kind of return, I decided I should look at the 3x, 2x kind of ETFs and just see what I can see there. Be careful with these. They're not safe, okay? Not at all. I've lost immense amounts of money on them. I've made a lot of money on them, but I've lost a lot of money on these if you're not careful. Because what they do is they multiply percentage gain. But what you don't realize is that the way that they do it is they reset it like daily or something. I have to look and remember. And what I found out the hard way was that if you think that over time, like that they would somehow be about the same. So if over time IWM lost 10% or something like that, you would think that this would lose 30% over time. But that's not true, because it resets. What it does is it actually amplifies losses to some degree, which sounds confusing, but you'd have to look at the formula they use. So what that means is that like over time, if this lost like 10%, this could lose significantly more than that. And it could gain more too, but it could lose a lot more as well. So when you look at these side by side, there's almost like no comparison over the long term. And it's very confusing because you're looking at this like, well, it looks pretty similar, Booksy, like it's similar. Yeah, but notice that like long term is actually losing more. You can see back to where it was. What's also confusing is like these levels shouldn't be all the same. They are, that kind of stuff. So like it's not quite 1-to-1. I'm just telling you off the top of my head, like that's what I remember. But if you're trading a swing to the upside and you don't want to play options, this is a way to get more exposure. Very dangerous. Please don't trade these unless you do some research on them, please. The best rule of thumb I could tell you, if you're going to have a rule of thumb on these, is to not trade more than like a day. Basically, like they're good for day trades and that's it. Like don't trade it long term. You will lose money. Even if the stock seems like it's going to be better, like you probably will lose money because of the way that it trades. So it's strange. But if you want to do like if you don't have options abilities and you're like, I just want to be able to trade a swing up, well, this is a good alternative. Like this could potentially run 2 or 3x in the same move. But again, it's best used as like a day trade. So do I think that FOMC is going to cause the market to dump? This is such a loaded question. You know, there's so many things that could happen, and we could go through every one of those scenarios, right? And at the end of the day, it's kind of like, ultimately, what direction do you think the market is going to pick? And I think if the Fed comes back, then this is what's probable. If the Fed comes back and says, we're not going to do rate cuts, we're going to wait and see. I don't think that this is not priced in. I think this is already priced in theory. The fear index that they use, the fear indicator that they use is going down. It hit its peak. It's kind of eased off. If the Fed doesn't say anything too crazy that makes the market feel uncertain, I don't think it's going to have a great impact on direction at this moment, which tells me that I don't think it's going to rug pull necessarily. I think it's probable that it's going to be more stable and that you're just going to kind of see that stable continuation of what we see on a technical level. Most of the time, people expect really big things at FOMC. And it's true that during the meeting, you do get massive swings. That's always true. But what's not always true is that you always get some kind of massive turnaround. That's not true. Had we been higher, I would probably be saying something a little different. If IWM had reached 214 going into FOMC, I would expect a rug pull and then a final attempt to go up and then probably drop. But again, going into the end of the month, we still got another 10 days. And I don't see us as very high up. I don't see us as really like completing any kind of major bounce here. Like, it looks really weak. I think if there's a little bit of stability in the talk on the Fed's part in terms of like, yeah, this is going okay. We're still seeing labor market, issues, but otherwise inflation is stabilizing and coming down. And we're seeing that in the numbers, then this should be good. Another thing that you guys probably are aware of is that there was I think it's Atlanta or something, but there's an early indicator for GDP, which is, the big numbers for how America is growing. And when you look at GDP numbers, they were previously thought to be like, let's just say like 2.5% or something. That's close. I'd have to go look at the exact numbers again. But this early indicator dropped it to like negative. And everybody's like, oh my gosh, it's going to be negative. But then recent data came out that actually doesn't support that at all. It said it was going to drop by instead of dropping by 4%, it's going to drop by 0.4% or 0.2%. I mean, it was some ridiculous thing. And it was like, this is based on the actual numbers. So there's a big question mark now about why this early indicator was saying these really low numbers. That's what caused the market to sell off. If you look at timing wise, that combined with obviously the tariffs, but that was the big one. When that hit the headlines, and I think it was Atlanta or something, but I can't remember who did it, but who posted it. But I'd have to go look again. But that was the one that caused the market to start the big slide. It was because they were like, holy cow, this is going to be horrible, And then inflation data came back, and it wasn't that bad. Jobs were coming in, and it's not that bad. It was kind of close to what was expected. It was a little weak. It was weak. But inflation was actually stronger than expected in terms of that report. And it's it was strange. And then there was this actual numbers are being run, and it was it's not really looking like it's going to drop that much. And the idea is then well, that doesn't make a lot of sense. You're either going to have this massive amount of ground covered where that early indicator number now has to grow 4% to the end of the year, where it's going to change that much to meet these other. So you've got the basic crux of that story is that you have two different projections, and they're wildly different. And the one that sent the market reeling seems kind of out there, to be honest, compared to the other one. The other one's a more moderate kind of year-over-year loss, but it's still growth. And that's the thing. So the difference is super, super important. It's if year over year you go from 2.4 to 2.2% growth, okay, so you're not growing as fast. But the key word is you're growing. And that was what was the second report, was like, yeah, it looks like it's weakened, but it's growing. It's still growth. Which again, to me, I'm like, this is what I've been seeing in the market. I'm like, I don't get it. The people that are saying the market's going to crash and all this stuff, I understand why, based on tariffs that would hurt the economy, that they would be saying that. But at the same time, I'm like, if the earnings reports are coming back positive, they're just slower. It's just positive, but slower, which means you're still in a bull market. You're just not growing as quickly, in which case a correction is appropriate to like kind of ease off the bubble and then slowly accelerate again and grow. If the idea is we're going to capitulate into a recession and you're going to have negative GDP growth, which is what this other report was saying, that's completely different. You know, that's completely different. That's bear market material. I'm like, wow, like, why are they so different? Like, I don't know. They just are, you know? Somebody's getting fired, you know what I mean? Like, because I don't know how you could possibly come up with such wildly different numbers. It doesn't make any sense to me, you know? I don't know. Anyways. So I have a lot of issues with this market sell-off. I already said that. Like, I feel like it's mostly because of fear of what tariffs will do, and then also these other reports that were saying that, oh no, you know, our GDP numbers are going to go negative. I mean, that's not growth. That's loss. I mean, that's crazy. Well, yeah, of course that's going to send the market in a spiral nosedive. So it's just very, very awkward. I would love to get those exact numbers for you guys today instead of just kind of guessing. I had it on my phone. I don't know where I put my phone. I don't know. Where did I put my phone? Let me see if I can get it really quick. All right, I'm going to give you guys those numbers. This is pretty important because oh, crap, my phone bill's due. What the? Yeah, I don't know if you guys saw about Nvidia, but Nvidia didn't exactly do well. I don't know where it is now. Are you kidding me? I might have deleted it. What a dumb thing to do. What? Way to go, Booksy. Well, I'm lost. I don't know where it went. We'll see. Hang on. Let's see. The odds for a rate cut are just 1% today. I marked that off. May 7th has only a 17.5% likelihood that we're getting a rate cut. You have to go all the way to June, and then you're going to see maybe 65%. Oh, it was GDP Now. That's what it's called. So GDP Now. Oh my gosh. So Oh my gosh. This is how bad this is. So a few weeks ago, the GDP now was forecasting a 2.3%. Okay. 2.3%. And then their worst week was negative 2.8%. And then ever since then, it's gone up. It's gone from negative 2.8 to negative 2.4 the next week, to negative 2.1 the next week, to negative 1.8 the next week, which means that negative 1.8 is now the new one. So it went a 0.5% increase since they first dumped the market with the GDP now. It says it's not an official forecast, but a running estimate of real GDP growth based on available economic data. And then there was another one, though, that was saying, like, instead of it being, like, again, instead of it being 2.3%, it was like 2.1% or something, like this other revised thing. And I'm like, so basically this GDP now forecasted this horrible negative GDP, and then it's easing off of it. And this other forecast just said, oh, you're just going to drop like 2%. Or 0.2%. It's like, what? That's so different. That doesn't even make sense to me. Like, how can it be that different? Anyways, you get the point. I hopefully made my point about that. We don't need to keep belaying the point. So the Fed is certainly going to have a big impact on what people think is going to happen. It could affect that GDP outlook if they decide to change certain things in their plans. You asked about AMC again. Within an hour? I didn't say within an hour for sure. I said that maybe it could happen within an hour. We don't know. Right now, nothing is happening. It's not pushing over 308. It's kind of stuck. So at the moment, I wouldn't say anything's for sure. I'm going to put the lower 308 on there. I'm on a 4-hour time frame. There's plenty of room to run. That's not the question here, right? There's plenty of room to run. Okay, plenty. I will say this. Okay, this is another thing that we talked about. I put a bunch of stuff in the Discord group. And I want to kind of briefly mention some of it, not all of it, because it's relevant. And I didn't stream the last couple of days. So I had posted a kind of an incredible amount of information here, which, and I don't mean that to bolster myself. I just mean like it was a lot. If you wanted to read through it, you could, but I probably maybe did too much. One of the things that I was trying to reiterate when we were talking about, in defense of my own call outs or whatever, this was made originally, the posting in the TA channel was October 2024. And in this one, we talked about what might happen here, I keep messing it up, on a rebound and where we might go. And in this particular setup, what I said was that more than likely we'd be hitting the gap fill on or around earnings, which is true. And that when we got up to March, we could be back up near the top here around 430, which has not yet happened, okay? But I want you to notice that those levels that we marked off as, hey, these are problematic zones where you could see that downturn start early. It ends up being pretty darn close to these, kind of like these first two. And arguably, you'd say it's a little closer to this one because of how high it went. But it's kind of in the middle, to be fair. And I think that is what ended up happening. There's a sense in which, even in that point, like I kind of knew in the back of my head, there were these low targets because you had these creeks that were developed to the upside, and we could hit those targets. And this was October, okay? You can see nothing had happened yet. The rest of this, though, and this is why I reposted this, the rest of this that occurred is largely the same. I think at that time, I remember saying something like, you really don't have to go over like 5 something in order to get down low, because if you look at the sell-off values, you can probably get to earnings, you could probably get to that value here, 50-50 around the floor instead of 50-50 around 5. And that would get you to the same spot. So there's all these little measurements here that you can see. That at that time was me trying to triangulate where you might be at that time. I thought we would be down there around earnings and that we would then be popping up in March. Now, maybe one of the issues here that we're seeing is that in this particular time period, we're not getting a high push right now. We pushed up to 377, rejected. We came down low. Will we still get back to that roughly 430 area? I don't know. But 426 was the higher marker that I marked off recently. So just using like recent TA and whatever. I mentioned this because I think a lot of folks were asking, like, is this still going to happen? I get DMs, direct messages from people, and they say, is this still going to happen? It's still going to go up in this time, this and this and this. And I'm like, I don't really see anything that it would suggest it would not. The only thing that we're missing is the second move up, but it technically didn't have to go that low. And I'm really sorry about that. I wish it had gone that high. I was thinking it would. That was my preferred route, but if it doesn't, it doesn't. And this was certainly a possibility, that early downturn, looking back at our October call out here. And it ended up chopping up sideways till about the same time. I mean, it was really, timing wise, was about correct. It was around that December 6th area. We got some of those early pops and then going up. It ended up timing out correctly, the wave. Unfortunately, it hit these lower marks and failed to advance. That's all there is to it. Looking back, it's like, yeah, that 550 area, right where that second red marker is where it kind of craps out and then comes back down. I knew that was a problem zone, and we said as much. The rest of this, however, I don't see why it would change. And I was mentioning that because locally, if you look at where we are now, and this is kind of the chart I have up on the screen anyways, but this is like a bigger version of it, it's really the same. It's the exact same. We're just trying to make it more minutia. It's no different. So do I think it's still on track to potentially hit new lows? Yeah. Do I think that it could have an LPS? Well, yeah. And this is what I mentioned about this, is that when you look backwards, this particular motion that happened in 2020 on that pump hasn't happened yet. We do not have a really strong backup into the previous range top that pushes against resistance. We just don't have it. And it would need to be a push. We're at 308 again. Maybe we're going to break now. It would need to be a push, ideally, if it were going to do all of that all at once. Not just to 330, not just to 380 or something, but really all the way to the 426 mark. I think if you hit that area, you've made that advancement. So I'm skeptical of it because of what's going on right now. But I do want to say that, like, that's not out of the question here. When you look at this widening, I certainly could understand why we might be heading back towards at least 408. And I think that's probably high enough, you know. But we need to see that advancement take place. And I'm not going to shy away from past mistakes if I make mistakes. But largely, like, this is still following through pretty closely with what I thought back in October. And I'm not going to be ashamed of that either. You know, just to say, like, hey, yeah, I wasn't 100% right about these targets, but in terms of like where those wave tops were, where we might expect to be at certain times, we did. You know, here's earnings, here's the gap fill. Like, it's 2 weeks later or whatever. I mean, that's not that far off, guys. And when you look at the big picture, March in my mind was probably going to be that big advancement. And I think that's just what we're missing. We're just kind of missing that retest here. That's what I've been saying. Like, if you can get over that $4 area, there's a chance that this goes pretty far. It could even like just take off. But in order for that to happen, that's kind of where that magic has to happen. Otherwise, it could just be like we would expect it to be, a distribution. We are coming back up and selling off again at 4s to drive the price lower. And then you're going to go down to new lows. Like, you're going to hit new lows. More than likely. If it sells off at 4, more than likely, meaning much greater than 50% in my mind, 70% chance perhaps, even higher, that you're going to then sell back down and come down really low. I don't see it as just one thing. I see it as like a bunch of things. Now, you can see on the chart here, I have this 4-hour OBV up right here. And you're probably wondering, what is that about? This is another comparison. I was talking about this previously because I was wondering if this is what this was. I wasn't sure back then. I said, well, it did pump, but we would still need to see it sell down low. It never came back down all the way. Did a little shallow bump, then it did another little shallow bump. It looks like a compression, just like we see on the which makes sense, I guess. Just like we see on, price action, we're seeing it on OBV, that there's kind of this same like little cat ear drop, cat ear drop, cat ear drop, and it's starting to press its way outward until maybe it breaks out. I think it's possible that that's the middle of the cat ears. I've said that before, that compression is really a compression on this smaller wave up, and it will make an explosive move, potentially even to go higher than it did before up here, but it's probably going to be to drop. And I went back to look at, I'm flipping back and forth between the Discord, but I went back to look at this area one more time to check out the OBV, okay? And when I did that, all right, this is what I came up with on the OBV comparison. So if you look at the bottom of the screen here, if you're able to view it, you'll see that on the on-balance volume back in 2020, during the bigger pump that went back up to retest the bottom of the range, OBV actually spikes and goes higher than before. Notice that there's a shrinking iteration going on right before that happens. It really is very one-to-one with what we're seeing right now in on-balance volume. You look at the left side of the screen here and the right side of the screen here. That's nearly one-to-one. I don't like to do those kind of comparisons necessarily with like the fractal stuff, but I do think it's important to look at the overall picture and say, is this proportionally like doing pretty much the same thing? And it is. Once this had advanced over that original downward creek, which again was kind of divergent starting off here. I mean, it starts on this first big pump. This first big pump, I can't see the timing necessarily on it perfectly. It looks like it's around May of 2020. All right, it pumps up maybe a little later in May, but May 2020, mid-May. And then ever since then, you can see the on-balance volume is just kind of shrinking until the second pump, which then pushes higher. Now, we don't have the exact same setup because that big, gigantic move that we made is huge. But if you look at the resulting move afterwards, it actually is then pretty much one-to-one. If you look at the secondary action here that happened in May, again, very similar timing, all right? And you look at that pump, notice that the rest of this move is just kind of downward until you get to this secondary move up to the top here, right? And then it starts that cat ear motion of the wave down, back up, and down. So that's down through the floor, back up to retest that now as resistance, then down again. Notice that the 180 that I've got right there, that pink line, that this actually extends above it during that time, comes back down, and then it does it again, but it fails to break out. Notice where that's at right here. It's really approaching that 377 zone to 4 zone. So if we were to go above it slightly, we'd probably hit 4. Okay? That would make the most sense here. So pushing up again to distribute and then coming back down. Well, then we're probably on about the same page. Yeah. Yeah, I don't know if he even follows me anymore or whatnot, but that sounds pretty similar. We're missing that distributive action between the ears, that this is like a compression between the ears, and we're missing that. So on balance volume, this is what I would expect. There'd be a big hike in on balance volume. It's hard to see it here because this is obviously just a screenshot, but this is a widening. I can't draw it out. This is actually a widening right here. If you look at the bottom, 1, 2, 3, 4, 5 right there. This is 1, 2, 3, 4, 5 right there. Same thing would apply here, 1, 2, 3, 4, 5, although it's a bit weird. And obviously there are some differences. I don't want to get like too detailed about it, but yeah, there's some differences. But the specifics the broader kind of picture is very much the same. You would expect this to be some kind of a pump before a drop. When I looked at the other comparisons, like where was this platform? This ends up being like a 50-50 drop through this on balance volume. And then the target that's in mind is an interesting triangulation. Very interesting. It's a triangulation from the initial drop, which is right before the COVID stuff, which happened in March 2020. That's actually a lower end in this particular case. It's pretty low. This is all hiking up constantly. Okay, but it's about there. And then there's a build out, and there's kind of an M-cross jump right before the bigger move that happened in May. That particular intersection on balance volume is the triangulation here with the creek. So you can see there's a creek that's kind of positioned down. The price action goes away from it. This is a sell down, but ultimately it does bring the price lower, but the on balance volume doesn't come lower. It stays elevated. This is the retail sell-off right here. This is the big one that tries to shake people out. Like, we're going to go. It's like, oh, everybody's like, we're going to go finally. We're taking off to the moon. You get these really volatile up thrusts. That's big bull trap. And then you drop down, and this is the bigger sell-off. And ultimately, what's interesting is it's still like where the stock finally hits its spring and then goes. So when I look at that, I'm like, yeah, that's pretty much the exact same setup, except that we're missing the big 50-50 drop here. We're missing that big pump that's going to convince people this is going to go. They start thinking that this could be potentially going to break out. You should see a big hike in on-balance volume here as it breaks out on on-balance volume. And then when it drops, I think, I'm not 1,000% sure about this part, but I think that this is the best triangulation that we have. And it goes back to, oddly, it goes back to a ledge that was created here. This is kind of interesting to me because when I look back at this, I don't really see a connection between March 2020 and then what happened later in terms of like lines and waves and stuff. What happened later in like October, November 2020. It's just like there's something there, but I don't really get it. I see the parallels, I see that motion. I don't really see any kind of connection here. However, that's not quite the case here in the local time frame, because if you remember, we had mapped it out. That's the same line. So this is kind of interesting. You see this green line? Maybe it's hard to see on this chart. But there's a green line that goes through the center of 2020 here. That's the same marker right there. It is. It's the same exact trend right there. And now where does that trend intersect locally? At $4, like that 415, that yellow pocket. So let's go back to the actual chart here. I'll show you what I mean. So that actually intersects right there at 420. That's where that line is. So that same marker that drove the price, and this again then looks like a really weak push of that. And I've got that now as like a main creek. This would also push that in theory, if that's correct, because you would have a very similar motion up through that marker like you did here. This is some kind of massive push away from it. This is what I was expecting when I was thinking $8. Didn't happen, right? We already kind of crossed that bridge this morning. But what's interesting about it is in looking back at where this OBV was on this drop, it does interact with that line early on. It's right around earnings, and it may be a little tricky to see, but there's actually no drop in on-balance volume until just after that earnings report, which is kind of roughly where this bounces on that line. And so even though it kind of looks like it's at the top, I don't think it is. I think it's actually like right there, which means that I'm probably right, that that's the same spot, probably. That's the same spot. I marked it off of this little green line. That's the same spot that we would expect to see right here be respected. So I'm like, yeah, everything kind of lines up. It's right where it should be. And then that triangulation would lead you to that bigger sell down. And OBV would have essentially like a double bottom there from the May drop, the first May drop. Interesting. Yeah. I think kind of interesting. What about price action? Well, notice, and this is again, I think pretty interesting. Notice that in that drop down period here, there was that double bottom that happened and there was like a sign of weakness, right? Remember that? No, I've got the yellow line coming across. This is where these two markers are. On balance volume is the same in those two periods. It's identical. Price action, not the same. Price action's come down. Notice that that line right here does go down to like that $2 range near and around May in earnings. If it were to reset, in theory, and come make a lower low and go down to like that $2 area, notice where it would be around earnings, and we can kind of mark it off. We don't have to be like perfectly precise about it. Earnings is on like around May 2nd or something. It may not be exactly that, but let's just say right around that time period. Notice that the triangulation is a little bit after that on like May 19th, May 15th. That's when we would expect there to be a divergence possibly happening if there's going to be one. We're not there yet, but I think that's where it would likely happen. We may see it drop again on the 14th or whatever. That's the same time period, guys, that we took off. May 14th is the same day we took off here. If you go back and you look, May 14th, we took off, and then on the 24th, we took off again. So it broke out on the 14th. If you're talking about options and stuff like that going into May, that seems like a very high probability time zone. Now, does that mean you should play options or whatever to that date? No. By all means, that would be probably a bad idea. But somewhere after that, does that seem like a likelihood? Probably. If you're patient and you wait for the lows, this could be like the big squeeze buy-in again, like the one that we had originally. I mean, it could be that significant. I can't say it will be, but I could definitely say it could be because the setup is essentially identical. And again, notice that those markers, I mean, it's perfect. The on-balance volume right there would track to the triangulation. These two lows would track down. We've seen this before. It's not always like, oh, this is definitely going to happen because it's on the chart. Obviously, there's question marks, but to me, that's pretty darn close. We talk about 226 as a possible level of like major support. I still think that's the right level. I'm going to stick to my guns on that as long as we go, you know, because I genuinely think I got that number right. I'm pretty sure I did. So I think that's going to be like the rebound floor, so to speak, when we come back up. It's pretty close to where this bottom was. It's not exactly the same. Okay. But it's pretty close. So anyways, that to me is a big probability, you know, and I was tracking that on balance volume before, wondering if this is going to have the sell off. It's not enough. It looks like it needs another one. And that again would lead to another cat ear kind of thing. So yeah. So I mean, like, that's all there is to it. It's pretty straightforward. And if that's what Stockfather says, I guess in this particular case, we're on the same page. I think we're going to see that pump here and then and drop back down. I'm thinking that this could go as high as, he said 375. Yeah, I mean, that's kind of this zone. That's the same marker. I mean, it's the top. It's like right there. There's not much difference. That's the first zone or the second zone I have. So I don't think that's completely unreasonable. That would be like if it doesn't press the creek at all, it would hit like 375. I'm inclined to think it's going to, though. But we'll see when it gets there. You know what I mean? Either way, this region between about 375 and 412 is currently like the hot zone, right? What's this other bit on here, though? Well, that's an LPS. I don't think that's likely going to happen. I've already explained why I think that's not likely going to happen. But an LPS would be like, this is actually the bottom. We're not going down again. And in order for that to happen, you'd have to see it break above mid-fours. It's that simple. And even then, I think you'd be likely in a position where you'd be up in... you could be up in April, but then drop back down and come back to mid-fours again. It'd have to have this kind of a move. This is a strange one because this is like a mirroring out of what happened here in terms of trajectory. It would be very different. I'm inclined to think this isn't what's going to happen. So you might see it on the chart and think, this is, Booksy thinks is going to do this. No, I made a second set so that I could just sort of try it out and just see like what do I think is possible here, you know. But do I think that this is the most likely course of action? No, I don't. I do not think it is. I think that what's the most likely course of action is kind of what I already had on the chart back in October, which is dropping down into May and then taking off end of May, going into June. I don't think it's very likely that we're going to see an early move. An LPS is what that would look like, though. It'd be basically, it doesn't come back down. There's too much, or there's not enough liquidity to bring it down low. Okay. I don't think it's very likely. Okay. Where's it going to in May? It should be going back up to the top, at least like 13. I think it's going to hit closer to 16 to 19 on an extension, but I don't know for sure if it's going to break through this gap. I've said before 19 something, like 1960, but there's reasons for that. It has to do with not just the gap fill, but the shift value from the original gap fill and like where that actually translates to, and it's similar. But in theory, it doesn't necessarily, if you look at this floor up here, if we had never shifted, we wouldn't necessarily expect it to go above this floor just to fill the gap. It'd be great if it did, but we wouldn't necessarily expect that. It would be more reasonable to say that, oh, it could go above that floor and fill the gap, but that floor ends up being a resistance. Where is that floor now? Well, we don't know. It's like magic. It's not there. Well, that's sort of true, sort of not true, because right where that gap is created at the top here is 1670. I think that's essentially the same value. It's very close. There was a specific reason that shift went to where it went, and when you translate that value over, it's really close to that. I think I did it here. It was like 1787 on. That's just kind of a guess as to where it is. It's tricky, you know, as these things are. It's not like easy to pinpoint it perfectly. I could get a little bit closer maybe. I'll get as close as I can. I'll do that. I'm not going to be lazy about it. I'll get as close as I can for you, okay? It actually looks worse than that. I think it should be lower. Yeah. It looks like 15. It's like $14.99, like $15. And it'll hit 15 then. More than likely. Now the reason for that is actually kind of interesting. Again, because that would be where the floor is. Could it go beyond 15? Yes, but that's where I'd say the sell zone is at 15. Very likely. It could go beyond that because there's no way to know with an extension, especially with extended hours or something on where that could go. But that would make the most sense to me that it hits 15 and rejects. And the main reason for that is then if you look at the triangulation of the next jump, because that's the first wave jump, right? We actually would jump the creek here at 775, push up. And then what's interesting is if you look at the triangulation out to August, which is the 2-year marker, and that's the 2-year cycle. We talked about it back here. It's a perfect 2-year cycle. If you look at the August time frame, I know it's weird because you're like, well, August isn't January, Booksy. I know that. I know it's awkward. I know it doesn't necessarily add up to be the same thing right now. I get it. But that August time frame is the 2-year marker, and that's where the triangulation is to the actual main creek breakout, like the final creek breakout. Now, I'm not positive about that, but what that would tell me is that, like, I'm not positive it's going to work exactly like that, but that is very similar to what we saw in 2020 in terms of like how we approach that top. Once we hit that top, we're kind of generating again, looking backwards, you can see what I mean. Notice that this is like constantly punching above it. It's like constantly push, push, push. That's the floor. This is what I mean when I say I don't know for a fact it won't go above it. It could go above it. This went above it, this went above it, and then this ultimately builds above it, right? But what we would expect is if that's the floor, it makes perfect sense then that when you jump this creek, if this is in the same spot, like if this were not ever moved, let's say you pumped up here, that you would probably do something like this, right? And then take off, because you'd be coming back into that range and then take off from the top of that range. Now, here's an interesting question that we're not asking. Does that have some kind of determination of timing? I don't know. Maybe. This is a long-winded sideways period. And when you look at the big picture here, it's kind of tricky, but there is a kind of a midpoint where it breaks down, and then that's where it breaks back out later, about halfway, from wave down to wave back up. And this ends up taking up about half the time, which is a long time. What I did before when I measured these out is I looked at how long it took on either side, and that was about the same. Like if you look at the approximate time it takes, to enter and to exit, from the time it like drops in to the time it leaves, it's pretty close to the same, right? Pretty darn close. It's not exact, but it's pretty close. It's like a few weeks off or something like that. So it's approximately the same amount of time it takes in that 2-year cycle once it gets to the top. So that's what I was looking at before. I was like, well, we didn't spend a lot of time in that top, to be honest. That would be right here. Like we didn't spend a lot of time. We really spent very little time. At most it would be from here to here, and that doesn't give like a huge window. It implies that if you hit this peak in June, that you would leave by October. Again, that's not a January run. That's like an October run. That doesn't really make sense. We're talking about August, September, October right there. But there is a question mark in my brain about this LPS area here. And I'm wondering, like, timing-wise, if, I don't know, somehow that's the same, but I don't know exactly how to measure it just yet. This went into distribution mode pretty early. It broke down to the floor here, and if I were measuring it out, it's not even close to the same. So it just sort of gets lost on me. Like, I don't know where to put it. Maybe I could put it way back here and count this all the same. That's close. That's a lot closer. All the way back to, I guess where it broke down in December 2021 to the hook in the middle. That puts it out to June 2020. It's right where it should be, but it's still not like hyper accurate. So for a breakout, proportionally, I'm saying that it might be roughly the same, but I don't know how to get it exactly right. So anyways, what would make the most sense here on this breakout, if we hit 15 and then maybe had an extension up to like as far as 19 or close to it, would be something like this. If we were without a shift, you would expect that. So if you take that same thing and you drive it, drive it backwards to where we are now on the shift value, it's something along those lines, which is kind of already what I had on the chart. I don't know why I drew it again, but I did it anyways. And what's interesting about that is then when you take a look at that big picture, this is what I was trying to get at. Now I remember, is that ignore all this stuff, I guess, was that this is the ultimately like the widest of the creeks that we have right there. It goes from the all-time top in June to that top that we had in August. That's the outermost creek that we have. It's right there on that intersection. Everything's timing out pretty well if it can get there in that time. And then if you notice that August time period, if it does happen to be the same in terms of timing, that August time period would be right around 15 where you'd make that jump and you'd be above. So it's odd because it doesn't It doesn't look that important on this chart, but I think we should keep this on the chart, guys. This is super significant. That little wick, it's there. It's just really small. That little wick that occurred right here to 1476, I'm going to say that's the level. I think they hit it on the way back. I think that's it. I think once it breaks 1476, that's when it takes off and tries to do the higher push. But we don't know exactly when that happens. We're just kind of, right now we're estimating because of the triangulation that it's probably going to be right there. And to me frankly, it looks perfect in terms of the wave measurement. I already had it measured out. This pink wave, this one you see right here, that's a 1-to-1 wave. That is the exact same wave that we had here. I just copied and pasted it. The exact same wave. And it's right where it should be on that intersection. My biggest concern, I suppose, at this stage, if we're going to just talk about like worries or whatever, is that for whatever reason we don't hold and we come back down. And it has to be said because there's no guarantees anywhere in the market. For whatever reason, if we didn't hold that and we failed, there's some kind of an SOW or something in the middle. I don't think it's impossible that this could track all the way back down again. It seems ridiculous, but when I look at that as a wave cross, 1, 2, that's just where it is. It does seem ridiculous to me, but part of me wonders if something like that might happen and we generate like a widening. We have a huge double bottom and then we generate like a big widening here, and then that final push is indeed in January. And so we're expecting like, oh, this 2-year cycle is going to be the same and push up, and it just doesn't. It comes down, and we actually go lower, which seems crazy. But when I look at the chart, I'm telling you guys that I think it's feasible just based on what I've seen. And then that February time period actually ends up being like the main jump. And it is a massive singular move, which is kind of insane. It seems ridiculous, I know. I'm inclined to think it's not as likely, but I'm just looking at the chart. I'm like, yeah, if it distributed here right on this top around 750, there's nowhere else to go. You might say, well, why wouldn't it just come back down and like stop on this creek at 360? Well, that's possible. I mean, I guess I could just leave that there. That's possible. There's a spot right there. But like, there's totally nothing stopping it. If it makes this jump low, there's nothing stopping it from coming all the way back down to like 150. I mean, in theory, aside from liquidity. People will say, well, that's never going to happen. Yeah, well, the same folks said the same thing about not coming back below like 4 or something or whatever, that was the floor. I'm like, it's probably going to come back to the 2s at some point, maybe even as low as in the 1s. So, you know, we think these things aren't possible, but you just look at the chart. If the creek is there and it's got an opening and it's triangulating out, I'm sorry, but you got to think that door could still be open. And if they check it, great. But I'm again more inclined to think that this does an earlier move. I'm curious about it because I'm also curious to know if what we experience may not be what we've been used to. And I've been thinking about this a lot lately because I wondered about the we're at 307. We still haven't pushed 310. There's nothing really to say in terms of like direction wise, any change just yet. I was thinking a lot about this COVID move, and I was like, you know, it was strange at the time because of the extremity of it. When you look back and you look at the bigger wave here, which I've kind of already got on the screen to some degree, the market did peak over here in near January. And so the market was already going up. If we were to put it on the same chart, this is where the stock market at large, like your small caps and stuff, started taking off. They just have like a more steady incline. And if we were to say like they hit their peak, then we would say they hit their peak over here. And it's very simple to me. It looks like a wave around. It looks like AMC went low and then like slingshotted through it and beyond it, sort of like a moon flipping around on gravity or something. You know what I mean? Like, it's just a more intense wave that technically starts later but ends earlier. So we hit a low before we went up and hit the high. We did that before the market. But a lot of people will say, like, well, AMC was front running the market. And I'm like, no, it wasn't. Because the market had already broken out back here. Like, it did its cross up while AMC was going down for a spring. It's a yin yang kind of thing. It went the other way, again, pulled back and then shot forward. I wouldn't say it was front running. I would say it was going for a liquidity spring. And that's the reason why it has such a violent reaction, but it needed the spring. And it actually does break down earlier. That's true. It hits the high and breaks down earlier, but it does it after a delay. It's behind the market in the beginning. So like a yo-yo or something, you know, I don't know. There's all kinds of fun analogies we could use. So I'm kind of curious. I've been curious about that for a while because the initial drop in is so violent and then the reaction out is also pretty big. But the walk up, it just looks like a normal, to me, it's like a pretty normal M cross overall. I would just kind of stare at it for a minute. I'm like, yeah, I don't know. It looks fairly straightforward. It's violent, yeah, but I mean, you can kind of see that movement forward and it just makes the jumps again. And ultimately, again, we have this problem of like, there's this huge disparity between where this first Greek is and where the second is. And it takes us a really long time, you know, years, I guess, to come back and retest it and then break it, right? That's where the cat ear's set up. But one thing I'm wondering is like when this came down, it has a walk down here that has some appearance of like what happened to us, but then there's this noise on the bottom. And I kind of looked back and I was like, yeah, I mean, it's somewhat similar, but really, if you look at this carefully, the similarities end pretty fast. If we were saying that this area, which we were making an argument for a minute ago, on OBV is the same as this middle zone here at 624, then you'd have to say that this is really the first, it is, because it drops from this level, which is what's happening here. This is the first reaction, and this is really the second. And so it leads you to kind of wonder, like, well, if that's the case, and I think it is, that walk down isn't exactly, like I'll say it's not incongruent with what we see on the walk out in terms of like directional speed. And it kind of makes me curious about, because I know that wave obviously measures out, but I've done this before. We talked about this before, and there's a really interesting little measurement you can do here. And you can see that 141, I messed it up. If you do 141 in and 141 out, look at that. It's the same measurement. I find that to be very curious because when we look at the big picture and we look at that here, and I've already done it to some degree, that's like 46 degrees, right, to the same marker. And then you look at the outward motion, it's not the same. This didn't end up being the same at all. And I thought that was very interesting because it almost looked like when you do it this way, and you're going to see where I'm coming to in just a second. It almost looked like when you do it this way, that this would have hit pretty early, like back in November, which again, maybe again, a testament to the idea that this could have been somehow mirroring out. But what's more curious to me is that trajectory out is so steep by comparison, and ultimately it is met, but it's lost. And that would have been the one that was lost in July. Remember when we were like, oh, it could go, but yada, yada, yada. And then the rest of this just looks like blah, you know, sell down. The reason I'm kind of mentioning this is then kind of moving forward, this is lightly used later. I wouldn't say it's exact, but it's lightly used later. It's kind of a generalized trajectory later. It's pretty close. And if you look at the final output here till that breakdown in November, that's not terribly different. That's a 141, that's 136. I could pretty easily suggest that, you know, we should be making this, you know, to this peak or something that matches it. I'm not going to do that, but It's, again, lightly the same in terms of in and out motion. So the reason that this is most curious to me, is because when we do it from that perspective, and I think I already did this right here. So they've got like a 46-degree angle, and this is 46.5. It's like loosely the same. It does suggest that we're right about the triangulation come February, that it should be up here around 72 again. It's very much the same motion. It really is. It's very strange. I think that's extremely interesting. But what I also find interesting is that this motion down has this extra drop in it. Like there's this longer walk down that occurred than it did here. And the difference is obvious in terms of like sideways action versus more direct action. Both have a similar trajectory down, but this takes a lot more time going out and then dropping straight down, whereas this kind of just walks down it. What does that mean, Booksy? I'm not 1,000% on this, but I will say that I've been thinking about it a lot, and I've kind of wondered if we expect it to kind of explode from here, but what if it doesn't explode? What if it just walks it back out in more of a mild-mannered way? Based on what we see down bottom here in terms of like trajectory and how this built out down low. Instead of it being kind of this one rocket, two rocket, there's a bigger move that it happens, and then the rest of it is a little more mild because it takes longer. There's this distance here that's unaccounted for. August all the way to February. So in my mind, I'm like, it's one of two things. And I've said this before, I think, because I've said, I'm not sure if it hits in February, if that's where it breaks down. On the one hand, I think it could hit really early. This could be hitting in like September, like way off what everyone's expecting, and then actually break down in February, which is kind of the opposite, right? That's one. But another part of me wonders if this is only, the reason I'm only thinking this is because the timing here of this breakout seems to indicate you would go up sooner than later, right? And that just seems a little too on the nose to me. It's like, why would they do the same thing twice? I don't know. Like, and then expect people to like sort of hold on to this thinking it's going to be different and go up. I have no idea why you do that. It doesn't make a lot of sense to me. But then I thought there's a pretty distinct difference between how they enter, and this sell down has got the main drop, but then it slows. Whereas the other one's the opposite. They did the drop later, it slows, then it drops. It's sort of backwards. And so I'm wondering if this initial push is really fast and then it kind of reverses. So this initial push up is kind of like this initial drop. It's like really violent. And then the rest of it, from a wave perspective and a rotational perspective, that actually makes a lot of sense to me. The rest of it is actually much slower. So yes, this is possible. I don't think it's impossible. I think it's totally possible that it could go really early, everyone's caught off guard, and then it chills out and then breaks down in February. There's another alternative here that has me extremely curious, which is what if this is like an inversion of this same move? So where this has this massive dump here, and that's when the shorts loaded up. And then the rest of this is kind of slow and methodical walk down. If you get something kind of similar where you get this massive pump here, and then the rest of it is kind of slow and methodical. It's rotational symmetry at its core. And it almost makes more sense that something like that might happen. Because if you get up to this point and this checks out, what it would look like is it would look like you're approaching that bottom again. So in theory, we've only approached it the one time, right? What if it looked like you're approaching that bottom again, and this is a more methodical kind of build out, right? And it does eventually pop, but it takes a little longer than expected. And that's kind of the rotational movement, which is very different than what people would expect. So there's actually three moves, like one big one in the beginning, which again is sort of a mirroring of this move coming down. And then there's a backup move, which is like this guy. That's right here. I know it's odd. But that backup move to me is like a perfect mirror of what we see here, which is a reversal. Notice that this pushes below and then comes back and like hooks back on this. This would push above, come back and hook. Then we get this kind of sideways down period. And proportionally, I'm thinking it's going to be pretty darn similar. Yeah, look at that, guys. It's the same distance. I think that I'm right. I don't know. I've been thinking about this for a while because I'm like, how does this even matter? Like, why does it matter that this is here like this? It seems backwards. It should have been like sideways and then dropped hard. And that's where you get the two drops, 1, 2. That's the same distance from 11 back to that floor. That's the 50-50. And then there's a shallower kind of pullback to try to get to that marker, although that would be around the halfway point. And this doesn't ever get back to halfway. This is like a 236 retracement or something. So it's a weaker retracement. And then there's a sudden, look at, it would have to be in the right time, I guess, but there's a sudden escalation. It doesn't look like it might, it only looks like it would maybe get to there. Here, let's get rid of stuff and measure it out. I'm kind of curious now. I want to see if I'm right about this, timing wise and measurement wise. Because we already know that the timing of this is pretty on point. But I want to see if, I don't know if I can do it without that creek right there. I at least need to have this one on the outside. And maybe this guy. I can recreate this one pretty easily. Yeah, so this initial movement, that's a massive drop. So it's negative 83 degrees, 48.16. So let's do 83 degrees. It's very steep. Why does it say the length of that line is negative 48? Let's just do it up here and then we'll move it. 83.4. Oh man, it's hard to do. All right, we're gonna have to get it close enough. Not good enough, Booksy. And then 48. Oh boy, this is going to be a pain in the butt. Maybe I should have just copied it and then moved one over, but let's see. What's the high here? Let's do that. Coordinates. High is 55.14, 698, 6.98, 55.14. Yeah, we're just chilling out. Double check. 55.14, 698, 55.4, 14, 698. So now, without messing, I don't know how we're going to do this. Without messing with those numbers, I guess we'll just change these till they're the right angle. Like, I don't know, 83.4. Oh, that was easier than I thought it would be. All right, that was it. That's the right one. Oh, well, how do we do this without knowing where the low is exactly? We think this is 1467. The low would be 186. If that's the case, that's right on the nose. If the takeoff date is right, which I'm not sure it is, that's only... Okay, well, actually, that's kind of freaky because that's from earnings, and that does hit perfectly. That's the right angle. I didn't change the angle. I'm going to say right now, I think that's the plan. I don't necessarily think that's what's going to happen. You could shift that over, but that's kind of freaky that it intersects pretty much perfectly. But then I want to see where, like the distance, I mean. Like that's kind of close to where we were thinking anyways, like $2. Let's say it doesn't take off until the 14th or the 24th. Like let's just use those same dates. So we're going to use the 14th and the 24th. This is the other option here. It could be before earnings, we don't know. But I'm going to use the same ones here. So the 14th, let's say 14th is not going to be right. It's going to be the 16th because it was a Friday. And then the 24th was a Monday. And it looks like 27th. Those are the two dates because that would be the window that's most likely if that's going to happen. Now, in theory, you could take off before then if the distance is the same, because this could be like one of those things where on earnings it pumps up and it breaks maybe the lower creek, and then it sort of sets up low and then starts going. Like we don't know, exactly how it's going to move, but it could be one of those things where it's like it's already in place and ready to go. It's already made the move, as opposed to this being a bottom, right? Is in theory, the best way to do it, if we're going to use the 14th date, would be to suggest that that's actually where it jumps up and over the creek, because that's what happened in May 14th of 2021. In which case, I think I need this one, but I need it on the correct region with the shift value. It's just not the right chart for it. I don't have it on this chart. This is really hard to do because I don't have... I'm sure this one's right. I'm not going to change it, but... All right, we'll say it's close enough. That's the value we want to jump. So it's a pretty big jump. So if it got all the way up there here, it's just not a lot of time. Doesn't seem very likely, does it? This is June 8th, which is actually pretty close, because if you think about this movement, it looks like it's not steep enough or something, like we want it to go like straight up, but it really is. I mean, it's really fine, because in theory, that's still ridiculously steep. I mean, that's as fast as this thing moved down. So what may happen based on a rotation here that I'm seeing is that this goes sideways and then pops This went really far away from. That would really screw up people too with their options and junk. This is July. So they would expect it to go up in May and then ramp up and just keep going. But based on this angle of ascension, it could take a while. This could take till July. And if you use the same principles, it may be the third week in June based on what we're seeing here with this rotation. Just saying, you know, if I'm going to do the same thing, that's what it would be. So one way or the other, you'd have that kind of motion. Now, if you shift this over, I'm sure it's the same. If you did an earnings pop, then it looks more like a May run at the end of May. So it's the exact same thing, just shifted to the side. We're still at 307, guys. We haven't moved. Market's like frozen in place. Yeah, both of these are pretty logistically correct. So either one. That's a big window, but it is what it is. I can't fix it. Sorry. The other thing we could do is maybe use this angle, because this should be the same angle for the OBV thing. We had that before. I don't know if I actually did it correctly or if I just kind of eyeballed it. So I'm going to try to do it correctly now. And that way we're not eyeballing it. Sorry, I messed up. I need big wins this year. I don't want little wins, little wins, little wins. Base hits are great. Like somebody said on the Discord group, base hits can get you into the Hall of Fame. And I think it's really important for base hits to build liquidity. But if we're building liquidity, I'm going to be building it towards an end here. And I think that this is what everybody really wants to know anyways for AMC and a GME. So it's either this bottom and this, no, it's got to be top and bottom. So, because it's got to be the flip around in this case. So it's got to be this top. This doesn't go through a bottom there. You know, weirdly, that's where that gap is. We talked about that before. There's a strange triangulation across here where the other gap was, which is interacting off this marker. So which is it, Booksy? I don't know. I guess I'll just have to go with what makes the most sense here. Yeah, there you have it. I don't know if you can fudge this much more, guys. I mean, like, what the actual F is that? Yeah, I saw a couple of those move. I did trade Nova, but just for a minute. It's right there in May. That is the wave cross. That would make the most sense. And it was tested and then pushed away, and now it's distributing back to it. I gotta be clear. I'm still not sure if that's where it's needing to intersect, but that's the same marker on OBV right there. Look at that. Friday, May 16th. I think we finally got a good handle on this. It's going to be like a 1 month run though. More than a month. I think that's the move that I've been waiting for. I was talking about this before. There's this drop-in value that you see reproduced. It's always reproduced somewhere. I think it's right there. All right, I'm inclined to think that the second motion here is probably the right one, not the first. It may seem a little off to some folks, but I'm just looking at that and it's like really clear that that's where that intersection is. It's at 186. What? It's not 226, Booksy. Yeah, I know. I don't know what that means. Maybe that means it goes below $1. I don't know. In terms of valuation, or it means that my numbers are off. I don't know. Do I still think 226 is really important? Yeah, I don't know. We'll see what happens when it gets down there. Okay, I'm not going to worry too much about it. I'd be curious to see if that also intersects that green line that comes from over here. So I'm going to muddy this up again. I'm not sure about this one. I'll have to, again, anchor this on there, but we'll start with that. I don't know, man. I think that's right. I still think that's correct. The only real question in my brain is like, should I be anchoring the bottom of the gaps at this point? Because the other reason I did this is when you look at the bottom to bottom, that's what I was doing when I first created it. It wasn't the gaps. The gaps are there. It's true that the gaps are there, but it's not because of the gaps that I drew the line the way I drew it. That just happened to be the case. Like, oh, it's the same parallel. It was because of these values that I did it. So let's do that. Let's copy it. Because this actually goes back to the original opening price of the stock, which makes sense to me. And then the rest of this just happens to be that that's where that bottom is. You can see it there. And where the gap is. And then when you come to where we currently are, that's where the gap is. And then that should be roughly where the bottom is. This looks like it goes beyond the bottom to me. Strangely, that intersection is 226, but it would have been like now. That's right where that gap is. So this is the right one. So this would kind of imply that you don't actually go that low. It's all kinds of messed up, guys. It would have made a lot more sense if we had come straight down into this earnings, I suppose, because then it would have hit all of them in the right spot, but it didn't. So that's all there is to it. Oh, well, nothing you can do about that. You just didn't do it. So what would be hit if that were the case? I do not know. Maybe, let's just drop it here and see. Maybe. There is a floor here. There's a marker at 277. There's a close at 272. And there's another back up here to 276. So directionally, there is a lot of information right here. Like it's not completely without support if you think that that's correct. That could be it. Let's see what that was in the previous time though. Let's see if that mattered back here at all. Maybe it did, and that gives us a little more evidence. Yeah, all right. It is there's one there, one there, one there, and one there. None of them hit it exactly. No, there's a close here. There's a bottom there. There's there's a low here. This one has a close, and a low. These don't interact with it at all, candle-wise, on the 4 hour. This has an open. This is close to a close. This is a close and a high. And this is a low. So there is a lot. I mean, there's a lot going on right in that middle. That's a lot of interest points. It's clustered. It's not a perfect line. Maybe it's like a fib level, like a really low fib level on like a gigantic channel. All right, yeah, I believe that. It looks like a halfway point. Almost. All right. It looks like a halfway point to me here. So this is like the lowest possible channel that you can like build out here, as you can see, like there to there. You could see the interaction early on here. Okay, well, I don't think it's unreasonable then. I think it's a pretty reasonable one. Even though it's not 1-to-1, which is okay with 2020. No one should expect that anyways. I think that's a pretty reasonable spot. All right, well, right now it's working perfectly, so I don't know. We'll see. Let's do the next one. Let's do this backup. So let's say it hits that peak on July 8th or something. Then it should be finished on September 3rd. That's really close to the cycle. That 2-year cycle. The wave, anyways, is pretty much 1-to-1. And that puts you right in that pocket. Because remember, we took that measurement from COVID and just, or not COVID, but the bigger first drop. We just said, okay, here's about how long it took. Here's the wave that was used. And that's it. Right there. And that's pretty spot on, y'all. We could be slightly off if we move this over. It looks more like the first one. So again, we're kind of seeing this like average between the 2 points here and here. I'm not really sure which one's right. The second one seems more right in the beginning, but the first one seemed more right with its ending. Anyways, but that's really close. So the implication would then be that you would back up and retest whatever that you're trying to retest. And so the top here was where? Let's find it. I'm going to like this if it works out really well. It's going to be exciting. It's like 130 or something. The high here was 1117, excuse me. 1129, 1143. Let's not use any of those. Let's go back. You guys are like, what? I don't want to use any of those. I'm going to go back to the one that hit the floor here. It's 1126. That's the one I want to use. I think in the preliminary support, I think that's the most important one. You see that little squash there too. I think it's 1126. That's the one I'm going to use. And then let's make this exact because we can. So let's just do it. Oh, that's not quite perfect, is it? I'm going to have to go back and fix that. It's a little off. It's like a few pennies off, 10 cents or something. That's a little off. All right, well, it's theoretically correct right now, but we have to, maybe if we make those adjustments, things will change a little bit. Maybe that brings that value up. Instead of being like a 186 or something, it's like, I don't know, it brings this one down either way. What I'm most curious about here is how far away from this value, this 1467, which we still think is probably right. Does this go? 1467 goes to 918. That's just the backup. Ah, that's a very important level. That's the 918 right there. Masterful. These algorithms are crazy good. That takes you right back to that middle check. It's like spot on. So you'd hit a high and then you'd back all the way up to like 918. Which really doesn't look far enough to me, but. And then in reverse, it would be like a double bottom where you would come back up and then maybe hit a spring. And that's August 21st, which actually is more accurate because that should be where the thing flips. Yikes, that's like perfect. This is August 24th, August 23rd. It's perfect. 2-year cycle. Right from that initial date. It works better from the June date than it does from the July date. So there's a lot of question marks here because again, I'm not sure. That's actually from the earliest date here. It's closer to earnings. Obviously the earnings move. But I mean, the fact that that measures out to be exact is still kind of freaky. It doesn't really matter if I'm like a little off here or there because in the end, that's weird. Like think about it. The fact that that measures from the earnings, if you take a reverse sampling, to put you right back in that zone, which is the shift value to take you back to the top. That's crazy. The shift value to take you back to the top is the same as the distance from, and the angle is the same as this angle in reverse from earnings here. And that's kind of bonkers. And then the fact that that times out as a perfect 2-year cycle, which we already had on the chart, that's really crazy. That's not like that's a very specific kind of thing. And then the backup value from here to here and here to here brings you right back to the middle. It's like a transference of half and half, like moving the half and then half again. It's the same distance. So it kind of divided it into quarters up here, or thirds up here, and you're shifting it down. So certainly, and then that halfway point now being at the top, you can see that's also significance. Right there. So like this is now the top here, which is the halfway point on the shift. I think that's a pretty interesting setup. I'm just not sure about the timing because to me, the second one looks better on the bottom for sure, as opposed to hitting earnings. But the earnings one looks way better at the top in terms of timing out to the full marker. I don't know, man. I guess it just depends on what you want to do. And then both of them do a pretty good job. It really wouldn't make a huge difference of triangulating this area roughly in early September, end of August. It doesn't really make a huge difference at that point. It's just difference in terms of when it hits the top and when it hits the bottom and when it ultimately might leave by about a week. Yeah, it's not that off. It's about a week. It's a week window. So let's just keep it at that. We'll say it's a week window, and we're not gonna try to be more specific right now because I think it's too much for today. which is really all about FOMC anyways. We're at 309, so we're pushing out above it. That's good. We pushed above 308. That's good. So that is the creek jump. So then if it makes that jump, the next move up, I don't know why I did it like that. That's kind of confusing. The next move up would be, maybe, we'll see. I'm going to be taking a lunch break here in a minute. I know you've been asking me nicely, but there's a 50% marker right in the middle where it should be, where that breakdown happened right here. And that's the one that's kind of the key, I guess, for what we're dealing with here as a middle, because it's the middle of this wave, which means that in theory, we should be able to get a wave middle as well. In theory. Because if we know that, let's say we know where we think we know that roughly 916, 918 is the bottom, somewhere around there. We're not positive. We think it's going to make a spring or double bottom. So it's going to be 918 or like maybe a little lower. One of those numbers is going to be right. So we'll just go with 918 because we don't have anything else. Okay. That leads you back up to this support, which definitely makes sense to me right there. So let's do it retroactively then. Oh, that's the bottom of the January run. What? What? Oh my goodness. Okay. Let's use 28. Let's use 28.54 because that's the bottom of the January run back up, which I think is important. Like in terms of the grand scheme of things, it's probably going to be what was being aimed for here anyways when they started doing that shifting stuff before the split. So here's where what we're doing right now is we're basically just taking, see, but that's off. I don't know. Well, it's one of these two. Low of 28.06. What's this high? 28.15. Neither of those even matches. All right, whatever. Well, it's one of these two. That's the range. It's not a big range. It's a 50-cent range. So, you know, you could say 28, you could say 28.50. Ultimately, they're both probably accurate in terms of like a guess. Pretty accurate guesses. So one is pretty close to the top here. Now, if we're assuming that we push above it, we would make it higher, but I'm just going to put it right on the dot. And then the other one is a little lower. That's at 28.06. I think we would need to make a little bit of a higher push. So I'm going to do 28.07 if we're going to advance, and 28.55 because that would be at least 1 penny higher. So depending on which one's clicked, which one's used. So that's your spring value. So the first value that's notched in here might be more like 28. It might be that 918 value. Like that would be the first hit. Then it would react. We're talking about a rotational symmetry, right? I'm losing space here. And then we would react. And then this would then come down to either 898 probably or 908, somewhere in that pocket. And then it would push up. Man, that's perfect, guys. Look at that. Look where the middle is. It's right above 14 and the creek. So then you'd have like a wave move up. Now this, I'm drawing it. What is that?
I have no idea.
Can you go look and see if that's the screw falling out again? Okay, just set it up somewhere. I'll deal with it. So the only thing here that's kind of bothersome is the timing, because the timing might get really fast, but it's actually really slow. The first move is fast, and it takes a long time to build out. This is a short enough time frame. I might be able to do a quick rotation on the actual bars pattern. This doesn't always work because for some reason when it does this, it does silly stuff. It doesn't like to work. That's not really a rotation. I'm just mirroring it. But sometimes this can help you visualize it. I don't know. I'm inclined to think it should be leaving that area at that time, not just taking off at that time. But the timing here is messed up, so... Yeah, I mean, it's possible. It could just take longer than expected. And that is the 50% mark. So the idea here would be that somewhere around September, you're out. You're doing the 50-50 business here, and then you're just taking off. So there's a wave. That's a bit more accurate. And I'm thinking that this motion out, because it's not actually mirrored, this would need to be higher than this push to show support, and then a lower push, and then there'd be like a bigger move, and really this could come back pretty far. Yeah. And then this could take a longer time to kind of build out on there, on the support. That's right in the middle of that gap, which does happen sometimes. You get kind of stuck. They trade it. And at this point, people would be looking at this like really bullish anyways. So it could be a time to kind of chew it up and then pump. So far, this is looking pretty darn accurate in terms of timing. Maybe what would be expected. And then there's a backup period that takes quite a while. I'm going to divide it in half because that's basically divided in half. Still at 309. This is struggling. What I'm going to do is I'll come back later and make, we'll do some FOMC stuff. And then if you have requests, I will look at those requests. I can't really tell you for sure anything else other than like broader market, which I already kind of think is, it's just really just sitting here, guys. It's not making it, and it needs to make an advancement right there. It's the same as AMC. Everything is sitting right underneath where it needs to be. It's certainly a mixed bag. It looks like it could be a distribution spot right now because it's sitting underneath it, the middle. Everything's sitting right underneath where it should be breaking out. And AMC's the same way. It's sitting right underneath it. I'm going to guess most of the market's doing kind of the same thing here. I think most of the market, not all of it. I mean, FANG could be the same way. Technically, it's on that edge. It could dump here and then react. I'm starting to think that's what we're going to see is like a drop and then a reaction back up. I do think most of the market might be kind of the same. 359. So if you're looking at something, see if there's a support above it that it's sort of sitting underneath. 510. It seems like a lot of the market's being brought up to the top. Okay, that's pretty close to the timing of the breakdown, which is at the 50% mark. The reaction, which is in the middle. And then the ending. It's kind of pumping through it. I gotta finish this up. So then we have a reaction the other way. This is just a retracement. So we're going to use the high end just because this is what I got on the screen. So I'm going to use that. 28.55. So this comes back to 2010. And then it wouldn't be like this perfect. It wouldn't be like a perfect zigzag. But it's basically like this. There'd be probably some chop in here. It could drop faster and chill out on the bottom longer. But I'm just going to make it straight lined. That's that. And the last move here. Let's go from the middle up. Because I'm going to see if I can get it as close as I can to an exact turnaround. Now, there is a piece missing, and that piece is the very tippy top. There's that flush that happened to the upside, that ramp up in extended hours. I don't know if that's included in this. So there is an element of mystery there, perhaps. 239. Yep, that's it. That's not a lot. I wonder if this isn't going to get us up as high as we thought. Some of these other waves definitely seem like they're going to get you there. This kind of implies if it's just a rotational motion that you may not get as high as expected. This is probably an accident. Let's get rid of this. 2 p.m. Eastern, usually, yeah. But there's a release of data, and then there's like a 30-minute window, and then he comes on. Oh, man. Let's see here. Gosh, this is getting hard to do on the 4-hour. I keep running out of space. I keep zooming in. Guys, this is February 2026. Holy cow. We got there. The timing is perfect. This is not $70. That is off. This is $41.89. No, 42 basically. It's like $41.97, give or take a few pennies. So it's basically $42. That's it. That's the middle. No doubt about it. That's like the liquid middle here in terms of like the center of this area on the top. And then you can see like that started back here in December of 2022. So here's what we've established. A perfect rotation on this marker, as perfect as we can get it. And as approximately as we can get it. And I'm not 1,000% sure that I got it perfect because I think I messed up the beginning on that first drawdown. We noticed it was like 10 cents off on the very bottom or something. So it could be a little off by like give or take. Let's just say on the total, how many moves did we do? 1, 2, 3, 4, 5. So I give or take 50 cents, okay? 10 cents variable every time could be kind of different, pretty stacked up, right? But given a variable amount, maybe 50 cents to $1 at most, and that could just attribute us to like this lack of actual gap fill. This looks like it's going to hit 42, not 60 something by February 2026. Is that high enough? I was kind of worried about this before. I didn't really want to believe it, but so I think here's what I'm thinking. I'm thinking that shift value applies to this as well. I was wondering if they were baking that into it, and I don't want to get, again, so deep into this that I get stuck forever, but like in theory, if that 226% value shift is correct, what we might be experiencing to some degree is that the shift itself, approximately, is causing us to not go back up. So if you take this value and you shift it, if you take this value and you shift it back up to 26, okay, which is what I just did here, like right there, as closely, okay, as I could. Notice that it comes back to this original kind of low drop-in value here. So if there was no shift, we would be seeing this coming back to roughly the highs that were made in January of 2021. And that's the breakdown level, as you can see pretty clearly. So this is a shifted value. This is kind of like a phantom value now. It's $92 on this chart. And I thought about that first, that it would be somewhere in this zone. It should come back. Usually it comes back to the LSPY. When we look at the smaller diagrams, like this is the zone that you would expect it to come back to. I probably would have picked either the bottom or the middle. This looks more like a top of it, not the bottom or the middle, you know. I normally wouldn't look at the top, but that's the implication here, is that without that shift, without ape and all that junk being introduced, it would be aiming for, most likely, I'm trying to catch that low, it would be aiming for that 96. That's the original wave up. And I think that's okay, because when you go back and you look at this, and you look at that macro wave, and I had said 90 a long time ago, and kind of flip-flop between 80, 90, and like versus the lower 60, 70 kind of area. This still looks right to me. You see that? And when I first did the wave, I used these bottoms. I tried 1, 2, and 3. You can see it's like the third one out from that low, and I don't use this because this is like a breakdown. This is like a weakness, early weakness. It's pointing low. I used the first bottom that was done in COVID here. And when you take that up, it's weird because it's all there. It's like in the original trading. There's a reaction here, a reaction here. And then you come back and you look at the current time frame. Look at that drop through and that intersection there. If you take that, it triangulates out to February at that like 92 mark, which is that high value. I mean, that's right on point. That's right where it should be. Close enough anyways to where it should be. Like those are pretty much all the same lines I drew early on. If you go back and look at my wave charts, you see I was like coming across here and then catching all these bottoms and intersections. I never was really sure 100% which one it was. But with the shift value included, that's the extra value down. I think this value's been shifted. That might explain why that was built out in preparation for a potential. I bet you they built that out in preparation for a potential right here. That's why this was so long and boring, because they weren't sure with ape what was going to happen. So they anchored it on the shift value. I said that before. I was like, how could they have possibly known in advance? Like, how could they have possibly known that these values are going to be in the right spot? Maybe they didn't, but it didn't matter because they already priced in like where that shift was going to be here. That explains a lot, actually. the operator used this level to knock it down. It happened right after ape. Right there. I think that was it. They were pricing it in. Right there. It certainly lends a lot of credibility to the idea that these operators are working on multi-year time frames, and this could be even more substantial than a normal assessment of like 1 to 3 years. This is like decades long. So this was ultimately like used as soon as ape was created to generate a new move to shift from 94 or 92, excuse me, down to 42. Wasn't that the ratio? It was like 9 to 5 too. It was a 9 to 5 ratio, I think. 900 to 500 million. It's like 900 million to 500 million. In terms of the valuation. So they lost, so out of the 90, you lost 50. Because you would have then had a 4 to 5, no. I don't know, I'd have to look at the proportions to it. You were left with 40% of the value, which is still high, but it's because of the price of ape. Price of ape was cheaper, so you had 900 million ape. You had 500 million or whatever it was, AMC, but AMC's got diluted X amount because of that. It had to take the value from somewhere. That's the value being taken right there. The value was taken and given to ape. It seems a little off because proportionally it's like, well, that doesn't seem right, but it's probably not, because it's probably fine because the ape was valued so little. Remember, ape dropped in value so much. I think they did not want to value, because if it were valued the same, this would be completely wrong. There's no way that would work, but they weren't, because this was like $4 or whatever, and ape was like $1 and like 80 cents, and then, it stayed like really low. It always stayed below 2 because there was almost twice as many shares. So market cap wise, it was in the end almost a division, but because AMC had more shares, it always looked more valuable. It was like 4s and 3s and 5s even. I think it went as high as like 6 right here. It stayed up pretty high, but ape stayed down pretty low. It was always like at least half the value. That makes sense because 900 million versus 500 million. It's a little bit, less than doubling or whatever, the 500. So it kind of makes sense to me that this would have happened, that the valuation shifted to here. So that means that I think I was a little bit off about when that shift actually occurred. That shift was there, but then when it recombined, it was like a double shift almost. It was like already priced in. So it's a confusing thing, isn't it? Now it makes me wonder if, maybe it's not that confusing. It just had to be priced in early. Yeah, there it is, right there. So just to kind of prove the point, I guess, this valuation taken sideways to that same degree. Look at where that shift is here in retrospect, right there. That's the same marker we're suggesting that we hit here. It's just shifted upward, and now it's almost more logical because it makes more sense to come back to this value than to some random value down here, which really only attributes to this Ellis. So they generated like a new platform, is what I'm trying to say, like operators. This was the original platform, dropped it down, generated a new one, dropped it down again, and now we're reacting. I don't know if we're going to come back to the original one then. That's kind of a bummer. I was really hoping we would see that because there was measurements to it still, even here. But because of that, it was like it followed through on its almost like a promise that it was going to shift it down, which is strange to think back on it. It's like a double shift. It's kind of weird. So it was already like pricing in the movements. Wow. Man, it's complicated. Well, that's probably why I'm not in finance. Oh, gosh. I will come back and look at some stuff. I'll be back in in a couple hours, hour and a half to start doing the JPAL stuff. It should be at 1 p.m. roughly Central Time. So an hour and a half. But I think 42 is the magic number, guys. I do. I had suspected it might be something like that for a little while, that they may shift the whole thing down. I'm kind of bummed out to find out that might be the case. It's not that unusual because if you take again, I know that it seems like a really big deal because they're like, well, you're just kind of changing everything. But remember, this shifted value works because it works. Like I think it's correct. It works so cleanly because it's correct. And notice that wick right there was set up valuation-wise to be on that same line. I mean, it's in the right spot. We already knew that. It was like slightly higher, but it actually looks better. Oddly, it looks like a better line now here than there. It's really bizarre. So if you want to take that same marker, what you can do is you can draw from the bottom in March 2020 through that June 28th area bottom in 2023. Then once you get that parallel, you set that up, you copy it, and you paste it, and you can set that up on the top with the opening gap value, because that's where it should be. See right there? That's the shifted gap value. That's the new parallel. That's the correct one for this wave, I think. And that's right on the opening day. They set it right where they wanted it to be. That's pretty sweet. I'm not going to argue about it. If you think I'm wrong, you think I'm wrong. But that's right, I think. And that's really right, as close as, like I said, as close as I'm going to get it for February 2026, which I've been saying for like a year. I think that's where it hits its high. So, since like forever. I feel like it's been a really long time. I think this was shifted down, and I think it's a bummer, but it is what it is. So, yeah, if you look at that like perfectly, you might think, well, it doesn't quite get there until March. Okay, well, don't buy options here, buy them out later or whatever. But like April or May or something, don't try to be like too close to it. But I think that's the key zone. And I mean, we gave it a week either side in the beginning right here. You can give it a week either side right here, and you can see it's a week off. So we're really in that zone right now. I should publish this chart. I never do that. I should publish it. It's a perfect rotation. It's a wave, perfect wave completion. This is shift value completion. Matches the OBV on the bottom here, the breakout on the bottom here. It's the same zones. The only thing off is just the bottom, I guess. It's like not knowing exactly where that's going to be. Super charts. All right, guys. Hitchhiker's Guide reference? Maybe. I mean, that's the number I got, but like I said, it could be off by like 50 cents or $1, because it's like, technically it's a little off right here, like slightly. And I was measuring backwards from this top, so that means that the bottom might be actually a little higher than what I have Like we said, there wasn't really any perfect hits here on this middle green line. It was like clustered. Maybe that's why. So there's an implication that also it wasn't quite in the right spot on earnings. It looked like it was closer on the second date. But if I'm off by like 10 cents, well, guess what? That actually might intersect on earnings, because you can see the earnings here is May 2nd. If I was off by like 10 cents on that drawdown, and we pull it back up from, 186 to 196, well, that puts it here, right? I mean, like you can see, like that would make it a different case, a case that maybe we actually have a second option here, like that this is a very viable, very good possibility. They could start running right on earnings and build out. I don't see that as unrealistic at all. And that just implies that you just get there earlier. We were saying like the top didn't quite look right. It looked better on the second or on the first one than the second one. Well, the difference might be negligible, but it may be very small, but it's right there. So I think you could make a case that it does hit on the low in earnings or thereabouts, and then takes off and gets there by late June as opposed to early. It's a week off, and then it's a slightly higher low. So, again, don't set a buy order for 186. If that's you're trying to catch a knife here, which I probably wouldn't do anyways. It's not confirmed, right? But maybe like look at that 10 cent, 15 cent window and be like, yeah, I think anything below $2 is kind of a gift. So I don't see why you would question anything else. Like, who gives it? I don't give a hoot if it gets lower or if it comes a little bit above it. We're talking about a range here, a window here. I don't feel like it's wise to tempt. It just seems silly. Like, what's the point? Bragging rights? I mean, I got a buy-in down here at 245. I could boast about it, but at this point, it's probably going to come lower anyways. Who cares? Those are things that don't really matter to me. So I'm not going to focus on that as much. I don't care, is what I'm trying to say. If I call out the bottom perfectly in the end, I think 226 would be really cool. But I also think that at this point, it's not looking like that's the right target. Seems like there's enough suggesting it goes lower. I'd say anywhere in that zone is a buy, and probably anywhere below 250 to be frank. I mean, it's insane. Let me try one more thing real quick. Just curious. Last thing. Then I'm going to go to lunch. I'm going to just kind of draw through here and just see where that goes. If that goes down to like 180s from the top, where is this 42 level? Well, 50s is a 618, 27 is a 0.5. So it doesn't really work as a fib retracement perfectly. It's pretty close to the 618 though. The 618 is 50, so maybe by extension we could see something like that. Because we don't know. I mean, they could have come up here and popped up higher to 130. Like, we don't know. Maybe the design was to get back to where ape was created. We're assuming that the shift happened here, but it could be that originally this was going to try to get back to this 126 level right at the beginning of ape. Makes sense to me to some degree. Or maybe right here, August, this 106 area where ape was created. Right there. That would be like a full cycle of sorts. So, that could have been like an extension above this angle. That angle is just there to represent the wave middle. But in theory, it could always go pop above it as a resistance goes. So we could see something like that where it pops up to like 50. Why not? I don't see why not. I think it's possible. And that would be a 618 retracement, 50.86. It's pretty dang close, guys. Yeah, that's where Ape was made in August 2022 right there. Similar shift value. It's just thoughts. Reverse split territory if it goes that low. We've been that low before. Nothing happened. I'm not sure where, you know, unless it sits underneath $1 for like 6 months or something, you don't have to do anything. There's no mandatory regulation that says it can't go underneath $1 or can't go underneath $2 or something. Unless it gets underneath $1 for like a certain amount of time, then it could be delisted. That's why splits happen. They don't just happen because the company is like, uh-oh. They happen because like they're not in compliance with the SEC for listing compliance or whatever with the NASDAQ or whatever. So, you know, there's problems depending on the way the company's set up and how it went public and stuff, if it drops beneath $1. But I don't think this matters. Okay? I really don't. I don't think it's going to be... I mean, people said the same thing about coming below 2. And I'm like, yeah, well, it's already happened here. Like, we came into the 2s, rather, coming below 3. I don't think it matters. I think what we're going to see is we're going to see a pump. We may get up to about 4 to 415. And then I think we're going to drop really hard going into earnings. And then I think we're going to come back up. I will take a picture of this chart and share it. I think this is a pretty accurate chart. And I agree with the timing of it. Temporally, it's kind of perfect, which is strange. I mean, I'm measuring it from these dates out. Do whatever you want to do with it if you don't like the idea of it, but you don't have to use it. But I'm going to use it. I think it's correct. I mean, this isn't that different from what I already thought, so I don't really care, you know. Like there's nothing we really found here that's profoundly different, except for this idea that it doesn't actually have like a second run up like people are expecting. That's what I wanted to test here, was like, what if it just has the first massive flush up? Once it gets above this top here at $9 up to 16, it chops for a while and then it slowly advances instead of rapidly advancing. That's a very different idea, but it really plays into this concept that I thought of a while back about the way this advanced is kind of interesting with the M cross versus this one. It's different. And that's why I wanted to sort of examine the idea, like what if it's not the same? And it's very strange to me that this kind of walk down here measures out to get you back to the gap fill. I mean, obviously, yes, down versus up, you can just kind of do a generalized 1, 2. I get that. But the rotation itself puts you in the right spot at the right time to break these things in coordination with what we see as a wave, which is kind of amazing. So the timing there is very much the same as it always been. My older charts had the same timing for breaking out here. The second part is different because this is a slower churn to the upside, with a lot more ups and downs, which frankly could mean that it's a lot less lucrative in theory. You know, if you have leaps or something, they're not going to suffer. In the money kind of options, they're not going to suffer during that time. But if you're just buying like short-term options on this breakout here in September and it breaks out and you're like, it's going to go, well, you'll make some money, but if it chops a lot, you're going to have a lot less than just that second big push. It's a lot more controlled in that way. So this is something that I think would be interesting. I don't feel like this is going to be likely irrelevant in the future. All right, I got to go. It's lunchtime. I'll be back in about an hour or so. to try to do the FOMC stuff. We'll see if the market does anything, but right now it's just kind of sitting still. Big day today. I will be back. You guys have a good lunch, and I will talk to you later. I'll probably just leave the stream going. I'll just mute it, so I don't have to have two different streams. Well, yeah, I'll do that. So let me mute it, and then I'll leave it on. We'll do like a 6-minute chart or something. Just let it chill for a bit.
So I guess it's muted.
No. That's what this was. Let me before I go, let me just see if it went higher. It did. I think it punched up for like a brief moment. I think it went higher, guys. It did try resistance, so we will see. Yeah, don't be surprised if there's like a drop here before an advancement. That shouldn't shock you. There could be a drop here before an advancement, but the rest of this should play out pretty much like that. It may go up as high as, I'm going to say it goes up maybe above this top here. It's possible. All right. I'll leave it on. I'll be back. Let's put IWM up on the side here. That's the small cap ETF. All right, everybody, I'm back. Low, 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 low. All 6. What?
Nothing. I need to put on me also.
Get set up and then ask me. Hey. All right, so we got the drop. Let's see what happens with volume. That's pretty normal for this kind of thing. It looks like a retrace back down to the floor from this morning. Double bottom, maybe. Low of 203.18, low of 203.18. Yeah, so right now it's a double bottom right now. It did drop through that 4-hour EMA, I guess, but nothing particularly good or bad about that if it's a double bottom. Well, maybe we'll knock it out before the FOMC meeting, but I definitely gotta tackle that. So that's got to be more important, right? So I'm gonna keep these two up on the screen, but I will look at this other one real quick. TNA. SPY is kind of doing the same dance here. I don't really want to do that. Let me think. Spin the screen. Let me do it. What are you trying to get on? Okay. Keep it turned. All right, I'll just do that, and then you can go from there. Okay. Here. So, well, I generally agree, but you never know. And the way these things are set up could be kind of still for some really big moves. So, in store. So we'll see. We'll see how it goes. This is a really short time frame, so we're not going to get a lot of information from indicators necessarily. I wouldn't expect a lot anyway. It looks like we're getting oversold on the 6-minute pretty quick on AMC. I'm going to listen in to FOMC. I don't know if I'm going to stream that part. Sometimes it works really well. It's super easy for me to set up. Sometimes it's not. So let's check out APDN before we get started. Usually it's like the commentary begins at about 2:30. Unless I'm just way off. That's usually what we see. So I'll look it up. But typically it's like the minutes are released and then there's a big reaction. Let's see here. Well, it started 30 minutes ago, so maybe I was wrong. No, it's just chilling out. It starts at 2:30, so. All right. Well, I'll keep that. It's on the Federal Reserve channel. I'll keep that on the docket here, but we're going to ignore it for now and focus on just looking at some stuff. Oh, man. Well, they just went through a split, so it's kind of like a dangerous proposition. 219. DNA Sciences. Pretty classic wave right there. designated it very, very steep. A bit of a competition between bears and bulls, perhaps. No, I'm not liking that. I mean, to me, it looks like it's going to be knocked down to like 28 cents. Right there. So if we saw some kind of a reaction to the upside first, that's one thing, but then I'm thinking down. There's really kind of no other way to see this. Like, at best, you could get a reaction to like the $6 mark, but really looks like it's going to, I mean, that's really far, I know, but I would suggest that this is setting up above $1 in order to kind of test it. So my thought is that if it loses $1, which might be later in April, that by, well, it's not that far. It just had a big reaction, this one right here. It doesn't look like a lot, but that's an up thrust. I mean, maybe. It's got this kind of motion of distribution to it. So you can see right there that it's trying to kind of like push up, push up, push up. It's just failing to find any kind of momentum that keeps. This is kind of the last big reaction. So it's really slumped. I'm just telling you, like, normally if I saw this right here, this double top motion, and it was distribution, I would think that this is just beginning. Because usually at this point, again, if I saw this on a chart right here, I would suggest that this is a reaction up right there. Like, that's a hook. It's already happened. So if it's going to go any further, like maybe it comes up like a little bit farther on some bigger reaction, but to me that looks like it's kind of already done the motion. It's already gotten a, if you look at this as a a drive up, that to me looks like the hooking motion. And then if you look at the horizontal where that floor was, look at the on balance right there. It's back up to that floor. So there's plenty of room to the downside here, depending on what they want to have happen. My biggest concern about this at this point is, and I know we're not using on balance volume all the time on here, but I do think it's important. The biggest concern is this guy. A lot of times you get this kind of equal and opposite reaction. So I would look at this and just even if I'm like, nah, I don't really think it's going to go that low. Maybe it doesn't go down below here. Fine. If you think that that's possible, that it's not a big of a dip, this to me is probably going to still be like the main one, because this is the waveform interacting off of there versus off of there. So it's the same equal and opposite reaction. This still looks like it would go down to, so it's a potential to go really low because of this, for sure. I don't think that's out of the question. But then maybe 75 cents. So there could be another set of down before back up again. So if I were looking at this as a wave, right, and I just thought, well, this is where it kind of found support and then lost it, right, and then it fails to kind of regain it, I would think even if it did have a reaction, it might not be until about 80 cents. And then if I'm lucky, it comes back up. I know it's a little odd to the top here. That's my thought about it. Is like it would be. All right, hold on. It's not boding well for the stream later if we keep cutting out. The problem is this with this though, Jason, is that you had a split that happened here, which means that this valuation shift that occurred may not be the same anymore. We may never get back above like a 50% retrace here. And that to that end, like I'm not really sure, you know, for 100% sure like of those facts. But I'm starting to explore this idea more and more because we keep seeing it, and on AMC it's like, you know, it kind of makes sense that might be a big part of this whole shebang, you know, that there's some kind of a valuation shifter that happens in the market at times with these splits. And I mean, it's anybody's guess. So, all right, this is what I'd say about this. If you're going to trade this on the premise that it could break again, I've already got this on the MFI. There's a trend down. There's the same one or similar one here on RSI, a trend down. It's a little flatter. Maybe be looking at the moving averages or something. I don't know. But you'd have to pick some top. It's just really not a breakout yet on RSI. But I suppose if you saw it cross up here, like soon, if you saw it cross up here and then cross up here, I'm on the 4 hour. Yeah, you could see a bit more of a reaction up, but I'm thinking that 252 is going to be a ceiling. Happy to be wrong. You never know. I can't predict perfectly like squeezes, you know, short interest, things like that. Those are behind the scenes mechanics that are there in every stock. Yeah, but that's just the thing. It's like this has already had like a major volume reaction and it really didn't go anywhere. You can see it just kind of hooked right there around it got stopped. So it hooked right around that middle line. So again, if I'm trading it, what I'm probably going to do if I wanted to trade this would be to take a look at this on the big picture, then come back to the smaller time frame, figure if there's any kind of a breakout here, what that might look like. I'm just going to do like the bare bones kind of stuff because I don't want to assume anything. I'm trying to get a conservative forecast on it. Probably going to look at this trend since that was a pretty solid directional movement right there. I had a lot of repeated tops and a lot of repeated bottoms. There's at least 2 bottoms and 1, 2, maybe 3 to 10 tops right there. You take something like that into consideration, then it's like, okay, well, now we have potential for, again, we're talking about potential for upside, but now we'd have to look and see what's going on. You take that same thing, map it out, and see what's going on the bigger picture. Maybe we can double that range, just see where it is. Doubling it gets us a little closer to the top, maybe right there. It's kind of a squishy middle. So, I mean, it's not very encouraging. It sort of looks like it's building out a downtrend that there's just no way to know. So this looks like, you can see right there, that heavy volume was actually kind of a break over what might be like a middle. And when I drag this out to the middle, where that little marker is, that breakout looks just like this one. It's in the same spot. So I think they're using this bottom to sort of define a trend and try to get to the side here. But I gotta say, like where it is right now, it's not positioned in a particularly great place of strength. So you'd have to see it break above 2 levels. One is, again, a little bit more nebulous, and that's like the $2 mark here. And then ultimately, it's got to get above that. And then you could potentially see a run from like 2 to 250. I think that's possible. maybe going into mid-March here, but I really couldn't tell you if it's going to have another lower low before then. This is a bit of a weakness, and then it turned up. After this huge volume, it went and made a lower low on that little tiny move. That's a significant marker. I wouldn't ignore it. This right here. Because that's a big reaction, and then it comes back down. It's like the settling of that reaction was to push down lower. Did it make a higher high on the big picture? Yeah. So both of those are key. But then previous to that, it had just kind of slid down. So I think we have to take that into consideration with like bearish direction and like where would the bears be kind of aiming. It seems like they're aiming for that 120 area, like we probably suspected correctly. How do you get there? I don't know, man. There's a number of possibilities, but that seems about right to me. That the bears have in mind probably coming back to $1 again. It looks like the same zones, like right here. So I think that 70-cent marker seems very likely. I don't know what happened to the stock, but that's what seems likely. And this is another one, since there was a bottom here and a bottom here, this is a cross. So this might be a key one. I wouldn't let this one go right away. If it holds on here, maybe we see an advancement to the middle. So go from 180 up to 2. That should be a break, like a creek jump. Because this also hit the top there. It's not just a bottom, it's also a top. You see that? So it's not just that it pushed away from this guy in the middle, it's also pushing up to a top. So I'm kind of with you. I think it's going to go, it may go up first. Maybe to like 207. This area. I don't know. It's really close to just kind of maybe right there. 202. And then I'd have to wait and see. But if it got stronger reaction, it should be heading back up. That's not very high. We're kind of playing with fire here. So the main issue is that this is like getting these big moves, and it's getting these high volume moves, but it's just kind of sitting, it's going nowhere. So I agree, market doesn't make sense. I mean, if you believe in the play, then believe in the play, you know. This is a potential lesser bullish channel right here. It's certainly possible that we see something like this with more of like a squeeze motion to it. But you know, the way these things are set up, there's just no telling. I mean, we could end up going kind of sideways and even making a lower low and then come up later and hit 2. And you just don't know. I don't see anything here that's really helpful, because when we get to like the 4 hour, or the 15 minute, for example, you can get overbought pretty quick. And it can stay overbought for a while and still go nowhere, which happened up here. That cross is done. This is the reaction. It's just such a weak reaction. So it makes me feel like the wave is weak. That's what I'm trying to say. Like the wave is finishing on the RSI like horizontally, but we barely moved. So if you like took this and turned it upright, it looked like this was the bottom right here, and then this is pushing up to the top, and the top is literally like $2 on that channel because it's making lower lows. That's what proportionally this looks like to me. Do you see why? Like this is coming up to the top again, right where it was here. going up on RSI equals sideways on price action. So heavily shorted. I mean, kind of preaching to the choir here. Like, I understand that. Like, it's frustrating. That makes it very difficult for me from a technical perspective to chart it, is what I'm trying to say. Because if there was to be a motion, it would be like beyond simple recognition of like, here's where we are. Like, it'd have to be on a higher time frame, like a bigger reaction. So again, if I'm trading it, I look at the smallest level and then the biggest level, and I just kind of compare the two. And I'd say there's a chance that on the small term it gets some pretty steep sell-offs here and there, but on the big picture we might see it pop to like 250. It's possible if it can get out of that channel. I don't see why not. So IWM, big sell down. Hits 203. This has more to do with FOMC, which we're going to be talking about here. And then the pump out hits a higher high. So it had double bottom and then made a higher high. Unfortunately, within FOMC kind of stuff, that's pretty typical. You usually get kind of an early move and then there's like a break. And then when he starts talking, market kind of chooses direction pretty quick. So don't take for granted that it came back up. And I'm looking at SPY. It's the same deal. I don't really feel like there's much movement here at all. I want to go back to, let's do like 6 minute on SPY. I want to see what that looks like, because I want to see if that's the same overall. Oh, geez. Okay, well, that's unpleasant. That doesn't make any sense, but all right. Yeah, okay, whatever. Yeah, we'll see. I'm just kind of chuckling to myself here about this. It's like, this doesn't make any sense. It calls flush like 22% in this little move. It doesn't make any sense. Yeah, 203, 205.35 was a marker I had set up on IWM. It still hasn't pushed over it. It did go down, double bottom. Now it's going back up. That big volume right there on that low. I mean, it's a positive sign that it went down first. I am happy about that. Made a higher low on SPY. It just has to get over this marker. And if we see it continually wick up, I'm going to be saying it's distributive. All right, he's on, he's talking. So let's see if we can get it going. I have no promises, guys, about audio here. I'm going to do my best, but... What? Go live. Why is it like back in time? Good. Oh, he showed graphs.
The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based
We're
on the
pumping.
Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories,
We're
core
pumping.
PCE prices rose 2.8%. Some
Yes.
near-term measures of
Come
inflation
on.
expectations have recently moved up. We see this in both market and survey-based measures.
Come on.
And survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
This
In
volume's
today's meeting, the committee
kind of
decided to maintain the target range for the federal funds rate at 4.25% to 4.5%.
maintaining.
Looking ahead, the new administration is in the process of implementing significant policy changes in
Yeah.
4 distinct areas:
Kind of a fake out.
trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward.
AMC's not
An
moving.
admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated.
This is
And of course, these
pretty good
projections
looking
are
on
not a
Tesla.
committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals.
I think I was right. I think we're going to
If the
bounce
economy
here
remains
pretty big.
strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate.
There you go.
At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal,
SPY going for
and
this
keeping
gap fill.
longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Eking out over this exit, but
Howard Schneider with Reuters. Thanks for your time.
Not quite.
So, two things on sort of the real side here: inflation and then GDP.
This looks
How
good.
much of the higher inflation
holds.
forecast for this year is due to tariffs? And since
oh gosh, here we
the
go.
policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly,
Let's do or die
and
here,
critically
guys.
as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case.
All
But
right.
as I said, we really can't know that.
That's good.
We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
Colby.
Now that was what we
Thank you, Colby
expected.
Smith with the New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor inflation expectations very, very carefully, basically every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this. You do see increases
If it dumps, it's gonna go
widely
low.
in short-term inflation expectations. And people who fill out surveys and answer questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really
That's a widening
don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing
I don't like
in
this.
break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys, but if you look out 5 years or the five-year
We gotta get
forward,
above,
you'll see that
560s.
break-evens are either flat or actually slightly
570s
down in
really.
the case of the longer-term one. So
Gotta
we
get
look
above
at
these
that,
tops.
and we will be watching all of it very, very carefully. We do not take anything for granted. That's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration, and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation, most recently, has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car.
Yep.
But we don't know that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will.
In the real data.
Given where we are, we think our policy's in a good place to react to what comes, and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
You think it was
Nick Timmermans, The Wall
overblown?
Street Journal. Chair Powell, Chair Greenspan once defined price stability as an environment in which inflation is so low and stable over time that it doesn't materially enter into the decisions of households and firms.
Can you say that today, that we have that price stability, that households and businesses are ignoring price growth? When you see buy in advance psychology, big changes in inventories, and surveys that show consumers, at least in the short run, expect higher inflation.
So I do like that definition a lot. In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation.
All right.
We know inflation will bounce around. That is price stability.
Let's check out AMC
I
here.
think we were getting closer and
gonna
closer
break
to
out.
that. I wouldn't say we were at that. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27, of course, highly uncertain. So I see.
Was it be
progress
February
having been made
2026?
toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP for 2025?
So again, people wrote down 2 cuts the last time, and they look at the and they wrote down meaningful decline in growth.
Right.
From 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3, and so those kind of balance each other out. So people, not everybody, but on balance, people wrote down similar numbers. The changes aren't that
That's
big.
the
other
trend on
factor, though, as I
SPY.
mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
There you go.
Edward.
I don't know, man.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages.
I mean,
that are
I don't
consistent
hear anything
with,
particularly
2%
bearish.
inflation, assuming that we're going to keep getting.
There's a little
high
uncertainty, but he's
productivity. You've got
basically saying that they're well
unemployment pretty
structured
close to its natural level.
and that this is probably being overblown.
But the hiring rate
figures.
is quite low. But
Who
so is
knows?
the layoff rate. So you look at initial claims or layoffs. So you're not seeing people losing their jobs, but you're seeing that people who don't have a job having
I don't
to
know,
wait
man. It
longer
could be
and
an
longer.
upgress. If it
And,
is, it's
the
going to
question is,
dump
which
pretty
way does that
far.
break? If we were to see
Like back down to 560
a
here,
meaningful increase
probably.
in layoffs, then that
Yeah,
would
we could be in
probably
a
translate
cat ear.
fairly quickly into
Volume's kind of
unemployment because
so-so,
people are,
but
you
it's
know,
just breaking
it's
out,
not-
guys.
It's not a big hiring market.
If it can go,
We've been
it'll
watching
go
that,
soon, and
it's
it'll
just
probably
not
just
data. It
fly.
hasn't happened. What we've had is a low firing, low hiring.
It's going to be a
situation,
squeeze
and
moment
it seems
because
to be
there's a
imbalanced
gap
now
over
for,
here.
you know, for the last
Unaccounted
6, 7, 8
for.
months.
You
That's
can just
where
see
we
the
are.
setup.
There's healthy levels
Right
of job
there.
creation too. So overall, it's a labor market that's in balance, and you know we
But-
watch it very carefully.
So
We'll
then
see.
have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other?
In labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
You know, only in a kind of an early way. I mean, it's only.
I
been
mean,
a
this
few
to me
months,
still
right?
looks decent.
You know,
It's
for
pushing up
example,
above the middle.
layoffs that are
If
happening
it can
here
hold, then
are,
it's going to go.
You know, they're certainly meaningful to the people
You
involved.
could come
and they may
back
be meaningful
to-
to a particular neighborhood or
You
region.
can see
or
right
area,
here.
But at the national level, they're not significant yet. But we don't know. We don't know how far that will go.
Right
We'll
at
find out much more.
565.
I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. And
Right
I
there.
think hard to trace it to specific tariffs, but it must
it can
have-
hold
it must
this
have
level,
something to do with it's either noise.
It's okay.
and it'll come
If it
back, and
can't
that-
hold
that's
this
very
level,
possible too,
it's
but
not
if it is
okay.
persistent, then it must be to do with
Right at
you know,
565,
people buying
34.
ahead of tariffs or raising prices ahead of tariffs and things like
If this
that.
holds, it's
Those
going to
kinds of
probably
things
go
happen
all the way
very,
up
very
to
hard capture,
576.
because so much of it is indirect.
Pretty
A
easily.
great example is
If it can't hold, I think we're going to head
Washington
right back
tariffed
down
in
to
the last round of tariffs, and
below
prices went up, but
560.
Prices also went up on dryers, which
So,
are not tariffed. So
here to
the
here.
manufacturers just they just kind of followed the crowd and raised it. So
Yep.
things happen very indirectly, and so there'll be a
And
lot of
here to
work done
here.
in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant
raise
effects
the
in
price of
economic data.
dryers. They didn't even need to be raised.
Craig Torres from Bloomberg News. Thanks, Chair Powell. You said transitory price increases from tariffs are
That's
the base
funny.
case. Transitory is the base
Basically,
case.
people got
Wasn't
scared.
it the base case last time? And didn't the FOMC forecast lower inflation ahead last time?
Gosh.
And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
When you say last time, are you talking about the last?
Pandemic, yes, during the
Because you
pandemic.
could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course, we're well aware of that. And, you know, it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten
Volume's
policy,
coming in. I mean,
because by
it's-
the time you have your effect,
we'll see.
you know, you're in effect, by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, you know, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this.
I don't know, man. Everything looks like it could take that
it's a
leg
different
up.
Situation. There are differences and similarities.
And if it drops, it's
I
not
mean,
gonna
it's a
drop
different
super
time.
far.
We haven't had
Like,
real
it's
price
not gonna be a
stability
complete erasure
fully
of the move.
reestablished yet, and we have to keep that in mind.
I think that's kind of bullish.
You know, we hear that people are very reluctant to take on, to allow prices to go up. At the same time, we hear that businesses are intending to pass many of these prices through. So it's hard to say how this is going to work out.
Steve,
Meh. This is kind of meh, GME.
Steve
It's
Leishman,
not really doing
Thanks
anything.
for taking my question, Mr. Chairman.
There's the hourly.
The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own
RSI on the 6 minute on AMC looks like it's ready to go. The MACD's crossed up and over.
You know, so we have two goals, right? We have maximum employment and price stability, and we have to balance those.
This
And,
doesn't look particularly
there
bullish
can be
coming up
situations
with
in
this
which
drop
there are
down.
tension, right? And we actually have
That
a
looks kinda
provision
bearish,
in our
but
consensus statement that says
This is
that we
a
should do
short
in that
time
case. That's a
frame.
very
That could have been
challenging,
correction right here.
you know, situation for
Let's
any
check
central
30
bank, and
minute.
certainly for us. And so what we say that we'll do
It's
is we'll
still there on the
look
30
how
minute.
far each of those two goals is from, each of those two measures
Yeah,
is from
it's tilting
goal.
down.
And then we'll ask how long we think it might take to
Okay.
get back to the goal for each.
It
of them.
might
We'll
be a
make
bit of
judgment
bearish
because
divergence
our
then.
tools work in
This
one
could be a bit
direction, whether
misleading
they're
for
tightening or
AMC.
loosening. So it's a very challenging situation. Let me say, we don't have that situation right now. That's not that's not where the economy is at all.
Yeah.
It's also
If
not
it gets
where the
hung up
forecast is. I don't
here,
know
it's
any
gonna
mainstream
dump.
forecasts that really show significant problems like that.
It's going to come right back down.
So
Well, just
So
to
it
follow
needs to
up,
get- it
yesterday,
really needs to get
the
back
UC
above
Anderson forecast
308.
Their high probability of a recession. Where do
Simple.
you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
You know, there's always
Because this
an
is bearish
unconditional
divergence,
probability,
and it
po-
started
possibility
over
of
here
a
at
recession.
304.
It might be broadly in the range of 1 in 4
Usually-
at any time. If you look back through the years, it could be.
You
within
see that
12
drop
months, a
right
1 in 4
there?
chance of a recession.
That's
So the question
the
is whether
that's the
that,
SOW.
whether this current situation, those possibilities are elevated. I will say this. We don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels, you know, still in the region of the traditional, because they were extremely low. If you
296
go back
again.
2 months.
That's
people were
okay.
saying that the likelihood
That's
of a
okay.
recession was
296
extremely low.
is,
So it's moved up, but it's not high.
It's fine. That's actually good.
Chris.
I would be okay with a 296
Hi,
pullback
thank you.
here,
Chris Rugaber
guys.
at
I
Associated
probably
Press.
need it.
As you know, I guess last night,
This would be like
President Trump fired
low,
2 members of the
and
Federal
then-
Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer that question in this very room some time ago, and I no desire to change that answer and have nothing new for you on that today.
Well, I just, okay. Maybe I'll have another mulligan. As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing that, what we saw last week from the University of Michigan, or does that carry the same
I'm just
weight as
mapping
did in
it.
the
If it
past?
goes down,
So
I think it's going to go to 296.
In no way did I place a huge weight on it. I think
I just think he's so funny sometimes.
Ex post
He cracks me up.
story, but it wasn't the case. That was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing. You know, we look at it, we don't dismiss data that we don't like, we force ourselves to look at it, but it is an outlier compared to.
So this divergence
market-based
would have a
and compared to
backup
other
to 296
survey-based,
for sure, which is just a
assessments of
floor test.
longer-run inflation
don't think it's
expectations. So
bad.
we got to keep that in mind.
If that happens,
Again,
it did make a higher
I
push
would
right
just say,
here.
we look at all
So-
of them, and that was kind of an outlier, but you know, nonetheless, we take notice of it.
Minuscule, but it tried.
Michael McKee from Bloomberg Radio and
Yeah,
Television.
I mean, it's really within a penny.
There's a worry on Wall Street that when you say you want to study the
like
net
within a
effect
penny, but-
of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can spot a problem early enough unless you decide to be preemptive?
Ah, I crushed that target. Look at that.
We're well aware of how
Crushed
things are
it.
going to evolve in the timeframes and all
That's a
that. And,
50-50
we
swing up to
use
the
our
middle.
tools to foster achievement of our
Probably
goals
where
to the
it hits
best we can.
some resistance, if there is
And
any.
Of course,
It's
we're
right
going to try to
there.
be timely with that. For right now,
Crushed it,
our
man.
data are pretty solid.
It's fun.
We are obviously
Look at
aware
that,
of the soft
206.
sentiment data and high uncertainty, and we're watching that carefully, and we think it's a good time for us to wait for further clarity.
It's higher
before we
now. It's
consider
pushed up
adjusting our
above
policy.
205. That's
Do you think
good.
it's going to be hard to get clarity in a government by tweet? I mean, do you have a feeling that at some point you actually will have
Yeah, this
a
is the
forecast you
first.
can
This is the
trust?
first stop zone.
Yes, I
Like
think
we were
we
just
will.
marking it off
It's
for
hard to say when that will
SPY.
be.
I didn't do it for this, but I would have put it right
You know,
here.
we're these
Because
decisions
this
are
is
going to
the-
be made, and they're going to be implemented. And
This
then
is like the
we'll know.
ice level.
At that point, we'll know what the decisions are, and we'll have to make assessments then about
right
their
there.
implications for the economy. Those things will happen. A lot of them will happen
Decent
over the course of,
volume. It's
the
not
coming months.
too
certainly
great.
over the course
It's
of
not
this
too
year.
little.
And we'll be adapting as we go.
I mean, we still have an hour left in the trading day, so that says something.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation. Can you walk us through what that
208,
looked like over the last
34?
couple of months, if there were specifics from the January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain.
Yeah, there's a resistance
and
at
that,
208.
You know, you're
right
reading
there.
about developments. The news is full of developments of tariffs being put on and taken off and things like that. That's some of that is
But
noise in the
ultimately,
sense that
like,
it's
if it
it's not really
continues to
telling you
move,
anything.
it's probably
We're
going to go
trying
to
extract a signal
214.
from that, and the signal is what's
That's
gonna
just
be the
part
effect
one
on
here of a
economic activity,
move.
on
It
inflation,
potentially
unemployment,
goes
and
up
all those
to,
things. So
I think,
so that's really when we say
214,
signal, and
maybe at
so the
highest
second thing was-
220.
Or similarly for tariff inflation, non-tariff inflation, ways that you're making the distinction.
That's sort of a special case of that.
This is going to be an
You know, the
interesting one on
idea
AMC.
being- And I do think that the first 2 months of this year are a great example. You've
That
got
does look
high
weak. I
readings
mean,
for
it looks
goods
like a hook,
inflation
but
after
I
a
wonder if it
string
just takes
of
takes it
readings
just
that
takes it
average close
up,
to zero.
ignores
You
the
have to ask if
divergence.
it's coming during tariffs, but you know,
Be really
it's
interesting.
very hard to actually scientifically go back and match up those increases and say yes.
There's nothing
I
there
can
on
prove that
4 hour.
That's from tariffs, but it
That
kinda
could
has
just
to
be
to
a-
some extent.
a
Plus
bear
noise,
trap.
There can be idiosyncratic readings in various categories, which will shortly reverse, and that happens too, and that could be a big piece of it. You know, I think we'll know in a couple of months. We'll know whether those were, you know, where that really was.
Killed
from.
it, man.
That's another case where I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and
Thank
how much of
gosh.
it, sorry, from tariffs and how much of it didn't. But that's what we'll be doing. We'll be doing that, and so will everybody else, and we'll all be trying very hard to make that assessment. And, you know, I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what, in your mind, would make something cross from noise to a signal, what that threshold would look like?
Thank God.
You know, it would depend on what we're talking about. I mean,
I needed a
obviously,
boost
you're
today.
looking
I didn't
for
want to
direct
dump.
evidence that
But,
particular pieces of inflation are or clearly
Man, oh
not
man, what a week.
caused by tariffs. For example, if it's something that was, you know, in the service sector that was far away from anything that's tariffed, you might think, okay, well, that is, like, frankly, housing services inflation, which, by the way, has been behaving well, you know, which for some time was kind of our problem. Now it's slow, but it's definitely, you know, moving down in a very good way.
He's probably about
It's more
done.
now with goods and to some extent with.
Usually doesn't do more than
housing
30
services
minutes or
inflation.
so.
Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid.
Yup.
What is your message to consumers that clearly
Already knew
disagree
that.
and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Egg prices.
Okay, so a couple things. The grocery bill
Curse
was
you,
about-
chickens.
About past inflation, really.
For getting
There was
sick.
inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit.
Blame the
and they're
chickens,
paying a
man.
lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and we completely understand and accept that.
And just to follow up,
Yup.
why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer? Does that mean you see a slowdown in economic growth as a real threat?
Oh gosh.
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth but higher inflation. And they kind of balance each other out. So you think, And unemployment is really, there's really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher
Right.
growth and meaningfully higher inflation.
that's
which
what I've
call
been
for different
saying.
responses, right? So
I'm with you, pal.
They cancel each other out, and people just said, okay, I'm going to stay here. But the second factor is it's so highly uncertain. Is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in.
Everything's
through
breaking
reserve
out.
banks and put in the beige
But we'll
book, and
see.
also through contacts
You never
at the
know with
board.
these kinds of things.
And we get all that. And
The volume
we do
needs to
understand
follow
that
through more, I
sentiment has
think.
fallen
It's kinda
off
weak.
pretty sharply, but economic activity has not yet. And so we're watching carefully.
Everything's
So I
kinda
would tell
going up.
people that the
Tesla's
economy
up
seems
6%
seems to be healthy
today.
We understand that.
I think
sentiment
Tesla's gonna
is-
break out,
is
go the other
quite
way.
negative at this time.
I really do.
And that probably has to do with, turmoil at the beginning of an administration that's making, big changes in areas of policy. And that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
Victoria.
This guy playing roller coaster
Hi, Victoria
tycoon
Higgins,
over here.
Politico. I wanted to ask, first of all, if you could
Worried about people being
clarify,
happy.
You were talking about how tariffs
Happiness gauge.
were a good part of the uptick in the inflation
Gotta build
forecast.
more
And I was just
paths.
wondering what that specifically refers to. Is that the tariffs that have already been
Or
put in
restrooms.
place? Is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind, talking a little more about the balance sheet
It's all
decision
eggs,
and
man.
what drove that.
This stupid chicken's
Does that
getting
have anything
sick.
to do with expectations of how
Chicken
the debt ceiling,
apocalypse.
raising the debt ceiling might affect the reserve supply?
Yeah. So in the SEP, you'll see that there's not further progress.
Excitement
on
too
core
low,
inflation
bad
this year. We're kind of flatlining, going sideways. We
Yeah,
don't
you
ask
get it.
people to write down how much of this is from tariffs and how much of it is not. But some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already, all forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I think, I guess the way I'd say it is, it was the flows in and out.
Man, I really
of
hope this
the,
doesn't rug pull
the
right after he's
TGA that got
done.
us thinking about it. But as we thought about it, we really came to the view that this was a good time to make the move that we made. And broadly committee that came around to the view that we
this
we
is
would do
tearing
the same
right
thing we'd
now.
already done, which is
Just
once
absolutely in a
I
rip.
guess in June, was it
I'm
June, whenever it was?
pretty excited
we
about
lowered
this.
the pace of QT, and we're just going to do that again. We're going to cut it roughly in
gotta get
half.
some
And the sense of that is, if you're
money
cutting
back
the
from
pace
all
of
these
QT roughly in half,
crappy
then the runway
trades
is
the last
probably
month.
doubled.
First month of this
so
year was
it's gonna-
wonderful.
It's going to
Second month was
slower
abysmal.
for longer. And people
Not
really liked
expected.
that. People thought that's a good idea. It's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and we by the way, we still think that reserves are abundant, although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. Now, of course, now the TGA is emptying out, so
Look at this
reserves
rip.
are higher now, so you can't really see the
man.
underlying signal. So we came
Feels
around
good
to the
to get it
view,
right.
and it had a lot of appeal, and so we did
Crushed
it.
it.
Really, it has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very
Golly,
successful
man. Come on.
rundown of the balance sheet.
Do it.
Again, the second time that we've slowed the pace.
Calls are up
and said that we would
70%.
stop when we
Oh,
got some
yeah.
the level we judge as ample. And
Thank
clearly
goodness.
We're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
Claire.
Claire Jones, Financial Times. You said in January, Chair Powell, that inflation expectations remained well anchored. Would you still say they remain well anchored today? And just to reiterate the question question of the best if they're not so well anchored.
And they need to
Why
fix
hasn't there
these
been a more
mics
radical shift
for
to
these-
the policy path today? Thank you.
So when we talk about inflation expectations being well anchored, we're talking about longer run inflation expectations. And they really haven't moved much, I mean, if at all. There's one reading that everyone's focusing on that's higher, but the other survey readings and the market-based readings all show relatively, well anchored.
As long as it doesn't rug pull, I'm in
expectations.
really good shape.
You would expect that expectations of inflation over the course of a year would move around because conditions change, and in this case, we have tariffs coming in. We don't know how big, there's so many things we don't know, but we kind of know there are going to be tariffs, and they tend to bring growth down. They tend to bring inflation up in the first instance. So I would say, I'm not dismissing what we're seeing in short-term inflation expectations. We, as I mentioned, follow that very carefully. But when we say expectations are well anchored, we're really looking at longer terms, 5-year and out, and there's really no story to tell 5 years and out, either in market-based or in surveys. But we'll watch.
I needed a win
we're
today,
not,
guys.
We're not going to
super
miss
excited.
any evidence that longer-term or medium-term inflation expectations are moving.
Now it's mine to lose.
Hi, Chair Powell. Neil Irwin with Axios. Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government-adjacent sectors, healthcare,
308.
education.
I don't know, man.
Do
I
you
think
agree
it might have
there's
been
some weakness in
a bear
underlying
trap.
private job growth?
Strange
and,
setup
do you see
here.
the composition of job growth as something that
It
has
really
policy
looked like it should have
implications?
come back, but
So that has been the case. We talked
This
about
is
that over the course
weird.
of the last year. There were
it gets
there
above
were
here, it's going to
some
go.
good number of months and times when
That's
a lot of the job
that's a bear
creation
trap,
was,
then.
was concentrated in educational institutions, healthcare.
Tesla's up 7%.
State governments, things like that. There were also
Nvidia's up
times when
4%.
private sector
AMD
job
is up
growth has been
4%.
moving in a healthy.
GME's
and
up
they're all
2.5.
jobs, but,
AMC's up
and
2.
remember, we're
Bang's
at
up
very low
almost 2.
unemployment for
It's kind of return back.
for quite a time now. So I
That
think
jumps, it's
a good
going to
labor
pop.
market, but
I'm
it's
kind of
something
curious
that we
why we
monitor
would jump
carefully.
right away.
From our standpoint, employment is employment.
IWM's up 2%.
The
SPY's
elected
up
government is entitled
nearly
to
2.
have,
One and a
we don't have policies
1.6.
that address different kinds of employment, but the elected government has a different role, and they can have those.
Here's a quick QT question. Does the committee envision at some point tapering the
Squeeze.
MBS runoff as well?
I think tapering
Oh,
it, I
man,
don't know.
it's going.
There's no plan to do that. It's
going,
at a certain
going.
point, we'll stop runoff. And we may or may not stop MBS
Come
runoff,
on.
though, because, we want to stop
Come on.
runoff in net
Get up
at
on
some
there.
point. We haven't made any decisions about that. But, we want the MBS to roll off our balance sheet. We really strongly desire that. So, but we haven't made any decisions about that. I think we'd look carefully at letting that keep going, but hold the overall size of the balance sheet in, constant at some point, a point that we're not out yet.
Simon.
Simon Rabinovich with The Economist. Thank you, Chair Powell. Several times today you've said that you feel you're well positioned to wait for greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales, plunge in confidence surveys. Today, not only did the S&P mark down the growth outlook, 17 of 19 see risks to the downside. So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
How confident?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at we're at a place where we can cut, or we can hold what is clearly a restrictive
This dude
stance
cracks
of
me up.
policy. And that's what I mean. I mean, I think that's well positioned.
We're well positioned to move whichever direction we need to move.
Forecasting is always
That's
very,
hilarious.
very hard, and in the current situation, I just think
guy
its
cracks me up.
uncertainty is remarkably high.
And sorry, standing here today, would you be surprised to pivot back towards rate cuts in May?
I think we're not going to be in any hurry to move.
Stop asking these dumb
as
questions.
I mentioned, I think we're well positioned
You guys are
to wait
screwing
for
us
further
over.
clarity. And
It's like they're
not in
trying
any
to
hurry.
make the market turn around.
Matt.
Mehdi
CNN. Thank you, Chair Powell. The Fed statement released today removed the line that previously said the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. Can you explain the decision to remove that line? Does it mean that you're now more concerned about inflation or about employment?
Actually, it does not mean either of those things. Sometimes with the language, it lives its
Actually, you're wrong.
life, and then we take it off, and that was the case here. There's really not meant to be any signal here. Over the past year, conveying a sense of the balance of risks was important, that they be in balance or close to being in balance.
So funny.
That was useful as we approached liftoff, if you remember. But we're past that. Or sorry, no, beginning to cut. So we just took it out. I actually would say that the more important thing now about risks, and this is in the pages like 10, 11, 12 of the SEP, if you look,
if you read
participants
farther,
widely, raised their estimate of the risks to our of uncertainty, but also the risks to growth and our employment and inflation mandates. That's a more salient point now than whether they're in balance.
So funny.
Just on the stock market, the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macroeconomy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect economic activity. So that's what we're looking for. I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. The real economy, the hard data, are still in
that is a
reasonably
lot
good
of
shape.
volume, guys,
It's
on
the
SPY.
soft data. It's the surveys that are showing, significant concerns, downside risks, and those kind of things. We don't dismiss that. We're watching it carefully, but we don't want to get ahead of that. We want to focus on the hard data. If that's going to affect the hard data, we should know it very quickly, and of course we'll understand that. But you don't see that yet.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s. Is the Fed willing to have a recession if it means breaking the back of inflation?
Don't say that word.
Fortunately, we're in a situation where we have seen inflation move down from higher levels to pretty close to 2%. While the unemployment rate has
That's what I've been saying. What is the
very
deal?
consistent with full employment, 4.1%. So we now have inflation coming in from an exogenous source, but the underlying inflationary picture before that was, basically 2.5% inflation, I would say, and 2% growth and 4% unemployment. So that's what we did. That's what together
Exogenous
the economy accomplished.
source.
So I don't see
What a
any reason
word.
to think that we're looking at a replay of the 70s or anything like that. Inflation, underlying inflation is still running in the twos.
Get out of here with your
probably a little
headlines.
bit of a pickup associated with tariffs. So I don't think we're facing, I wouldn't say we're in a situation that's remotely comparable to that.
And last month, the idea of a Doge dividend was proposed.
It is
which would send
remotely
$5,000
comparable.
Checks to every taxpayer from Doge savings. President Trump and Elon Musk have supported this. There's reports there could be a bill introduced on Capitol Hill. What impact might that have on household savings and spending in terms of your growth and
What a mess.
It's not appropriate for me to speculate on political ideas or fiscal policy for that
He
matter.
never
So
does
I'm
that.
going to pass on that one. Thank you.
Daniel.
He never ever does that. He didn't do it in Biden. He's not going to do it in Trump.
Daniel Davis from Agence France Presse. You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April the 2nd coming
Didn't
up.
he
Was it something you
already
considered
address
during
this?
this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of really a range of possible outcomes from tariffs and from trade policy generally.
Of course
and
he
they generally
does.
assume full retaliation in those. And so that's kind of baked into the numbers. What happens, it will be complicated, and there will be some retaliation and some not, and all that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain, but better informed forecasts. So yes, that's in there.
He's so disappointed.
Hi, Chair Powell. Jean Young with MNI Market News.
The guy's face, he was so disappointed
change that you made.
in that answer.
So the minutes had initially described your discussion on
He was hoping he was going to say something like it wasn't already included, like a gotcha moment.
From what you said earlier, it doesn't sound like there's a desire to kind of regain the pace of QT that we have at the moment after the debt ceiling is reset.
Powell
Is
is
that the
just
case?
crushing it today.
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move. It slows down the path and probably lengthens it, doubles it effectively by slowing by half. That people thought that's a good place to be. It'll help us assure that this path is a smooth one as we get closer and closer to that. So
we're getting hung
that's
up
how that came
here
about.
on all
I
the
guess my question is more, was that meant to be a temporary measure
The
during the debt
levels.
ceiling episode, or?
It was the TGA flows, Treasury General Account flows, that got us thinking about this. But the more
I think
we
we're gonna
thought
get a
about it, we came
pullback.
around to this. And it is,
We're getting a
yes,
little
it was
overcooked.
provoked. The original
I mean, we're already in a
discussion was
pullback
provoked
right
by
now,
that, I
but
think what we
this
came
is
up with,
concerning
though,
because AMC
was
didn't make
broader
that
than
jump
and different than- it does address
over the ice.
issue,
I think
but
it's
it really
it's
is
still tempting to
also-
come back down.
It fits in really nicely with our principles and our plans and the things we've done before and the things we said we would do.
Yeah,
So
it's
that's why I
turning.
have pretty strong support. I'd just say it's nothing to do with monetary policy, nothing to do with the size of the balance sheet. It's just kind of a common sense adjustment as you get closer and closer. Let's slow down a little bit again, and that way we'll be more and more confident that we're getting where we need to get. You can take our time getting there. We're shrinking the balance sheet every month, and we think it was a good play, and as I mentioned, well supported. Thanks very much.
He's done. All right, that's over. Phew, man. All right, he's done talking, so sometimes that can cause the market to sort of react now. I mean, it was nothing but pumping once he got on, and we'll see. There's a lot of volume in this, which is good, and a mixed bag. If it has some kind of a rug pull at this point, it's gonna be pretty harsh. I think on AMC, it did not ever make the advancement it needed to make today. I think we repeated it repeatedly earlier today, that it just needed to get above 310, and we pushed up above 308 to 310, and it looks like it wicked above, but that's still within a penny, and it just doesn't make any advancement. So I'm looking at this, the natural place to come back to on this divergence here, which is on all these indicators, is to back to 296, which frankly, at this point is actually good because we need to come back and find that support. It goes back to where we were on March 4th, which was that kind of first or the second bottom that we made that was really long standing. It's a silly backup. I don't think if you go all the way back down to 296, you're going to trade there very long, because even though like you're probably looking at this like, well, we're going into Friday, we're not going to break out on a Friday. I wouldn't put it past us. We ran last Friday and it was pretty good for the Monday setup. Don't put it past them just yet, because this particular backup, we've already traded this region. Now, there may be some more shares that need to trade hands, but if we do end up backing up here, we can't jump this ice level. And you can see right where it needs to happen, right at the same marker we talked about this morning. That's where it would pop and jump over and run. If that happens, we should see it just react and go. But if it doesn't happen, then I'm thinking 296. I just don't know why we would trade here more. We sat here for ever. I mean, it felt like forever. I don't know. Maybe it wasn't that long, but we've already had several trading days in that zone. It's my opinion that it's going to kind of hit it and just go. My only concern right now is that it just didn't quite, I mean, that wick above is like percentage of a penny. I mean, it's tiny. Is it there? Yeah, I think it's there. I'm going to trust that the chart is accurate, and it is actually there. It looks like it is. I'm going to just say, yeah, I think it's there. You know, I think it did push above. But if it dumps here and it comes back during a retrace, the market is going to pull it back down to 296. That would need to hold. If that doesn't hold, we could be coming all the way back down to this gap at 285. I've been kind of in the middle on some of this stuff in the past, and I don't know if you remember, but we've had a lot of situations like this where there's kind of like a shallower backup that we could hit, and it's always like ideal, and then there's kind of a lower one, and it's always the one that I'm always like, meh. And it's always about 50-50 in this case, because there's a chance that we come back and hit that, but I don't know if we need to. Like, we've already kind of punched through. At this point, if you leave a gap there, who cares? If the greater picture is to come back down later, then let's go ahead and just exit. This is going to stay on the chart, and more than likely you're going to come back down here in April anyways, you know. So you can rally without filling that gap. So I'm inclined to go that route right now and just say that I think it's going to maybe come back down to 296. If it has this, if it can't jump right now, we'll back up to 296. I think we're just going to pop and run, and we'll probably have a pretty bullish week. And then the week following is the week of uncertainty going into April 2nd. So mixed bag there. And I think that's where you're going to see that topping action probably taking place. I don't see any kind of negativity about coming back down right now, unless you're just in an options play or something and you're just kind of stuck. This might come from, I'm just staring at it, it might come from this kind of extraneous cat ear over here, and I don't like to just kind of pick each of these because all of them are going to be important in playing into this, but a lot of times they do come into play before the end. So there's two here that I think is where we're setting up right now. Those two, the ones I marked off. And these are kind of the final ones on this flattening here. He's like curved out. This would be the pocket that we're trying to deal with. So if you're looking for confirmation, if it breaks above 315 here and holds the support, it's probably going to move pretty fast up to the 370s, in my opinion. That's the play if you're looking for a good trade here to here. And it's a decent move. That's the bull move. It's not actually right now. That's a 20% move, okay? It's not small. But I think that's the main trade. And I think that you're dealing with right now is probably the shenanigans of the option sellers who don't want it to run, who want to keep it below probably some number like 3 or 350. And they don't want it to run. And they're going to work against the market, in this case, selling shares to try to keep the price down. And they may be successful. Unless you have a bull operator who steps in and is like, no, we're going to go. And you might need that. In some cases, I think there is a need for that kind of squeeze moment where you're just trying to squeeze out and use that as ammunition to take it back up. And then you open new sell positions, right? So on and so forth. So we are seeing a pretty deep retracement here, which is unfortunate, but it is what it is. I figured that was probably going to happen as soon as he stopped talking. We get that back up. A lot of heavy selling in there. A lot of people taking profits, I'm sure, from that trade. I took some off the table during that craziness. I needed to. Not a huge amount, maybe like 20-30% of my positions, just to see what I could get. We'll see what else happens here. I'm looking at SPY and IWM kind of at the same time, and there's a curiosity of, you know, that kind of dynamic between the two, just like wanting to see what's happening. And really, IWM just had a huge push. I mean, that's massive. From 202 up to 208, nearly. Didn't quite get there, and I'm pretty sure it should get there. So I'm gonna leave my positions, some of them on the table, because I think it should get there. I also traded TNA, which is a 3x for that, and I just did it short term. I only traded from about this 31 level up to about 33, and that was about a 20-25% gain. I'm done. I'm out of that. It's finished. I may get back in if it pumps again. If we see this kind of build a support and goes again, I think this could go all the way back up potentially. It's a mixed bag here. It could potentially go to 37. Like anything, these 3Xs are weird, and they can be pretty volatile in terms of how far they go and where you go in the process, so whether you get there or not. So at this point, I'm going to merge these back together, and I'm going to just work one screen at a time. So right now, it made a higher push. It's invaded that gap space, did not fill that gap space, got about not even halfway up it. This is what I was saying, is like, you really don't want to rug pull at this point, but I'm not particularly concerned about it unless it drops back beneath here. If it drops back beneath this 565.34, then we would be in serious trouble, potentially. I'm going to create an alert. If it gets down there, it'll signal. That's because that would be like a upthrust motion, and more than likely after that, it would come way back down. Doesn't necessarily mean it's super bearish, but I think it kind of stands on its own as like, yeah, that could be potentially very bad. It could certainly go from there all the way down to, I mean, significant lows. But I would say at first it probably comes back to this gap at 561. It'd be hard for me to kind of reconcile that on from a bullish standpoint, because it just looks like a series of cat ears. And I don't know, again, if that's necessarily going to happen. When you look at the big picture, that could be an SOS with a backup, but it's a weak, weird, distributive looking SOS because it's just really high volume into that peak. So right now it needs to have that support, and I don't think that level's negotiable. I think you really have to hold. This was when we dropped down on the 7th, the area that held. I think we were saying the same thing here. It was like right here on the 4th, that area. And then the 7th, it's the same region. It just got there early. So if we see a backup, this area here at 296 is probably going to play much the same for IWM and SPY as being a backup to that area from March, early March, the earliest of March, I should say, that first week. So you want to see that hold. If it can hold here, I think it's going to rocket. I really do think SPY is going to go from, you know, this 560 region. If it holds, that's the key. All right, it should go from there up to, I think it's going to go all the way up to 577. I don't see why not, because the trend itself, you can see the wave. I didn't even chart the wave technically, but yeah, I mean, it's pretty obvious. That's the top. That's probably the bottom of the wave right there. Maybe this is the bottom of the wave. That might even look better because that actually goes right through the middle. That goes right through that intersection. So when the chart is regular, this works very, 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 very well to triangulate when you hit a top. Yeah, this is suggesting Friday the 21st, which is this Friday, and or maybe Monday the 24th. It's like right there. I mean, you say whatever you want to say about it, but this works really well. And that is an intersection of, I think, the final kind of outermost trend here. So it makes perfect sense because you can see it's a perfect 50-50 up to that intersection. None of that's guaranteed. If you drop back through that level, this changes. This is not upward anymore. It's distribution back down. You'd be looking at creeks coming low instead. And yeah, potentially back down to floors at 551 or something like that. I'm not as concerned about that right now because I don't think it necessarily runs after this. I think there's a very high probability that it doesn't and that it actually peaks here and then kind of craps out. So I'm looking at Friday, guys, and I think it's going to be up here at 580. And I said 583 before. That was my marker on the chart. We may not get 583. That's another gap zone. We may not get that. If we do, great, but that'd be kind of a surprise. Maybe it would be like in a case of pushing the resistance, but then deciding to go back down. Like maybe this backs up on the Friday, and then Monday it pushes up and then comes down. I don't know. That's possible. But that was my marker for SPY. I put that in the Discord a week or so ago. I think it's going to go. So right now, we may have some time on our hands going into Friday because it doesn't look like there's any real desire or need to get there. I think it's going to get there a little bit early, maybe by noon on Friday. It seems to make more sense because I don't know why you'd wait till the last minute. Usually that's an early move. So I think we're going to get there by Friday if we're going to go. Okay. So today and tomorrow, we should see a push above this creek, which is a waveform center here. And if we get that, and we can get that this week, then I think, again, before Friday, we'll probably get it more than likely. So it'd be like Thursday or Friday morning, Thursday afternoon, Friday morning. So we may get a bit of a push up, a chill out period here, and then another up thrust motion. It's starting to look almost like a carbon copy of this. That's not really on purpose. I just looked over and I noticed that's what it looks like, but it's not really on purpose. I'm just thinking about Friday and Monday, what we might see. So I wouldn't be surprised we're at like 575 end of day Friday after peaking, and then Monday we see like some green followed by some serious red. That would be like a hook value right here. So there'd be a trend at some point established probably here up, and then you would see that breakdown right there. Like that. That looks pretty tight. It's my guess. Okay. Gap fill, back up again. Find a support probably right there at like 573. That is a historic support level from back here, so that's the level. And you pump up again to head towards that 581 to 583 gap, but I don't think you necessarily get it on Friday. If it does go beyond on Friday, then I don't think this is likely Monday. Okay? That's all very like logical, in step with what we'd expect if this can hold. That's a really important point to make continuously, because that is not a guarantee. Okay? So where would you buy in? I don't know. Probably if it came back above 570, be in good shape to ride it up to 580. And if it comes down low and you see that jump a creek or something, then you could just ride it that way. It's pretty straightforward. Okay. I don't know. I'd have to look, Jason. I got to flip back and forth between what, I'm doing here. But I got to make sure I hit the highlights. If the market on the whole is rallying, then you're mostly going to have winners. I mean, if the market's not rallying, you're mostly going to have losers with a few exceptions, right? And so it is important. I think the bottoming of this is already priced in. So I was kind of making the statement that I didn't think we would need to worry about as much downside after FOMC if that's the case. And that seems to be the case. I'm happy to flip back and forth, but if it's just an individual stock for an individual person, I got to be mindful of that. So, yeah, we'll see. everything had a decent little sell-off. Let's see where GME is. So GME looks a little more like that struggle again. It's a kind of a wedge action here, but at this point, it's hard to say that this is not bearish because I'm on a 1 hour here and it still looks like this is compressing down while this is pumping up. I will say on GME that seems to be more commonplace where you get this kind of reaction, but I'm also staring at it like M1, M2, and we're kind of missing that second bump. So I feel like we're missing that extension up here to 24. Otherwise, it's much the same as AMC. It's gotten above those levels around March 4th, which is the one we were talking about. If it holds that, and AMC's is a little lower, right? It's at 296. It's got more room here if it needs to fall. GME does not have that kind of room. That doesn't have that space. It can really only come down at that point to about 23.4. So, yeah, I don't know. I'm inclined to think this may not do that. We may compress a bit and then push up again momentarily. As the S-curve goes, I would position it as 50-50 off the top. And I would look at this as, actually, you can go pretty high. And this should be where this peaks and this valley happens, and then the cross up. You see right there, that's the middle here. So it's probable that it's the same level. It looks like 25.63, which is good because that's one of the markers that we have. That's back to this center. So that's an iterative breakout, guys. So that's an iteration here. That's like a 1, 2, and then you're going S-curve up. So there's a potential there to then S-curve up again, 3, 4. And I think that's not quite what I had in mind because I was still thinking we only come to 28 at first. That looks a little higher. That would be the $30 mark. But then again, that is kind of like this, isn't it? So was that 30.50? That's 30.50. That might be right. It could be very, very likely. The level at play here. Yeah, that was that floor. 30.50. Moderately disappointed in myself for timing this so wrong in the beginning, but sure. It does follow through. I mean, if you look at the bigger picture here, the S-curve up to 30.50, that's kind of what we have here. It's really similar, like a 1, 2 here. So there'd be a break period. I don't know how long. Maybe this isn't that long because earnings is on Tuesday. Unless earnings like dumps it and then rockets again. It does sort of imply that it could happen pretty fast. Like sooner than later is what I'm saying. Maybe the goal is to get up there by April 2nd. To use this as kind of the turnaround. It does sort of jive with it. So earnings is here on the 25th. So if it pushes up to 25 and then backs up, chops down to, it would need to be this floor, 24.60. Then you can get a second wave up and out by the second, April 2nd there. So a little bit wonky. That's what it would probably be. Up. And then maybe some chop. And up again. Yep. It's pretty close. higher than that. Hard to say. It looks like Tesla is kind of regaining a little bit here. Yeah, it's like kind of building back up. SPY building back up. It's just creating a second reactive top. Now it's hooking on the middle. So again, this is probably like one of those things. I don't know when it happens exactly, but it's just one of those things where I would have to see it kind of cross up and over here and then go from there. And that to me is an easy way to sort of see where this is moving on SPY if you got that middle in place. And then I think we're going to move up just to go into Friday. It looks bullish to me. Again, you guys are like, well, yeah, but it's going up. Of course it looks bullish. Well, I mean, I was saying that before, that this would probably just back up and go. But the only real risk is still 560, 550. You got to be careful of that area. It is a risky area. We may just need it for liquidity purposes. I don't know. Yeah, so I think possibly at earnings or shortly after earnings, we could be up here at, I can't really time it perfectly, but we could be up here at about 30, 50. Now, grand scheme of things, that matches the waves that we have. I'm not particularly overly like impressed with anything here because I do think that was what we measured out. We talked about how we thought maybe the middle of the cat ears as it measures would be here. And I think I marked off the third as the likely center. It's based on the division here of the middle from one middle to the next. But there's a window, and I did a lot of work on GME to try to find where this might be. And I'm not 1,000% convinced that I have it right. I'm just kind of using what I have. I mean, I got it close as I could, and there was some really interesting stuff that came from that few days of charting, but yeah, the red middle is like now. I mean, it's like right on earnings. You can see it right there. So the red wave would suggest that that's the next quarterly division. It's literally like on earnings day, like on the dot. And so that would suggest that Monday would be the direct center of this cat ear right here, the bigger one, which does follow. I mean, it looks like it, doesn't it? It's really close. So that would suggest again that maybe it takes a little longer even if you think that, because you'd be like, well, I don't know, man, this could then take out could take a while. It does make you wonder, well, if that goes out into June, how do you reconcile that? Well, there's different setups here. And we had talked about this at length. I'm not going to talk about it at length right now. And talked about why it might be the case that this divides the way it does. But there's downside and upside scenario. And then the second one, I did put this in the right spot. It's right here on June of this year, and that would also be a low. So the idea would be that the peaks are over here, and then you're in the middle of a second set of cat ears. So for a bigger picture analysis, which was the other one, the blue, the sense is that this should be a low period in May going into June before a markup. Granted, the breakouts here are kind of indiscriminate. They don't really tell you for sure anything 100% because at the end of the day, like, yeah, I mean, that could be correct, but we're not ultimately measuring it based on that. If we think there's a catalyst event, that wave is just the middle of a wave. Like, doesn't mean that's going to be the low, is what I mean, is that definitely on that date. It could already be breaking out on that date, but it would be that the overarching wave had if you were to mark off the wave at the end of the day, after a month or so, months afterwards, you'd look back and you'd say, yeah, that's the peak, right? Like, or that's the middle. That's the same thing here. Like, technically, this is not the lowest point, right? It is the quarter system. It's perfectly right where it breaks out. It's amazing, but it's not the lowest point. The wave actually goes lower earlier, and kind of works through it. Nor does it look like the perfect center. The center really looks more like September, and the breakout's on October. So not to say like that means everything, but it is the key date. So when we're talking about local middles, we're talking about earnings. Like this is kind of a TRO, which means you'd expect some upside here. And I think that's logical. It makes sense. Everything kind of looks like it bands together to give you a high probability that between the end of March and probably the beginning or the middle of April here that you're probably going to hit a peak, but then that's going to be that, you know, and ultimately like we're heading back down more than likely. Granted, what if it crosses up? Well, that changes things because then a peak and a valley are not positioned in a downward motion, like as in a downtrend with a peaks and valleys, but an upward motion with peaks and valleys. Pretty significant, right? That's happening here locally, but that hasn't been confirmed. And we went through this again at length because there's two competing major trends here on GME. And I already kind of went through this, and I'm learning some things too about these cat ears, and I think I'm right about the quarter system. In fact, I think I'm really onto something, but I can't like finish just right now. I'm not going to do it right this second. It's like 10 minutes left in the day. Anyways, point being is that this is in the right spot for a potential little boost here. And then we would have to wait, and the probability is that we would be in a valley with another boost, but all right. Markets are kind of stabilizing. End of the day is coming. Be a good time to look at some other stuff. 206.71. So we're going to end the day at this rate. We're going to end the day up 1.7%. I mean, that's a pretty big gain for the Russell. It is. I'm still in call positions. I'm not really feeling it on the 15-minute, but I'm sure like 4-hour looks okay. Yeah, on the 4-hour, it's moved up. It's up and over. It broke out. You can see right there. I say I'm not feeling on the 15-minute. I mean, it's overbought. It's clearly like overdone. It looks like it would sell off would be the next action, but I don't think that's the case necessarily. MFI is already there, but MFI often reaches a peak early. RSI is not there yet on the extended time frame on 4 hours. It may be on regular trading hours that it's overbought, but on extended trading hours, it's not even close. Well, not like significantly close. It's up above 50, but it's at about 55. So maybe some consolidation and then go again. So I'm thinking that probably is the case this week. It looks like on the MACD, on the 4-hour, guys, I crushed it on this thing, man. I'm happy about this because I really thought this through, and it was like, I think this is exactly what's going to happen. We're going to peak here and then come back through. And it's looking right. So we'd hit a peak early. I have the peak here that this might go up faster. It looks like it might be right about that. And then continue to travel upward on weakness until end of March. So even though this is coming down, I don't know why I have these ones in completely different days. Whatever. Maybe I was thinking because MFI usually is first, is the volume related one, that this would continue to pump on like a weakness up to retest 214, and then it would crap out here. So we're on pace for that. Lots of sellers, end of day probably, but we'll see if it holds up. If it holds up, it's a breakout. I mean, I don't really see any problem with it. It would have been nice to get above 208. That's a bit of a letdown. In terms of this valley, that would have been a really good one to push above coming back out, but we just didn't get it. So it's not going to happen. I doubt it's going to happen in the last 5 minutes of the day. So 4 hours crossing up. RSI is still heading up above its moving average. It looks okay. MFI is overbought. AGH was one we've done before. HLD. We've done both of those before. Jeez Louise. Well, yeah, I mean, the only one that seemed to follow through here was the RSI. I mean, I was way off about how high it goes. At least at first. I probably would have sold here because it went back up. I said that there might be, like, I had marked off like two to three bottoms potentially. Which one did it hit? It hit this one. So I said if it goes below and then it rebounds, that's this guy. Yep. Then it should walk right back up to 62 cents, and it did. Wow. And then it's up 180%. That's crazy. Yeah, but I would have sold. I mean, there's no way I would have ridden this up, guys. I'm just being honest. I would have been like, if I bought in here, I thought about it. My trigger went off, the first one. I had 3 up here, and it went off at like 45 cents. I mean, that's insane. Great call out for a squeeze play there. I mean, it worked out. 295% on that. Wow. For you, I mean, not for me. But, yeah, that's it, man. That's probably about it. I don't know. I wouldn't have called that. I would have been out at 58. So, yeah, it's at the top. It jumped over the middle here on this downtrend, and it jumped over it at 70 cents. It's ridden up to the top, push resistance. At this point, if it rides above $1.60, then who knows how far it goes. I'm inclined to say that I have no idea. But I'm also inclined to say, like, I mean, that's kind of as far as you would expect it to go. It's probably like a major 50% retracement at this point, or close to it. Yeah, maybe $2. And it's just one of those things, like, it's momentum trading. That's crazy, though. Yeah, but I would have, like I said, if I bought it, I would have been out at like 55. And then this is a gap up. I wouldn't have known what to do here. Maybe I would have held some, but it's unlikely. Now you're just chasing. 76 cents. I mean, the range trade here is finished, so there's not much else to say there. Another holdings. I think banks have largely taken advantage, so yeah, I wouldn't have got it. I'm just trying to be honest. Like, I know that what I targeted was likely, and it did hit, but as soon as it hit that, I would have been like out. Because that to me was like, oh, that's the reaction. That's where it should go. But then it goes way beyond. And I'm like, I would never have guessed it. That's just a squeeze. This is kind of same deal here. I think it's already made the wave. I mean, I don't really see this as a strong contender for continuation, much beyond $1. You can see that intersection at $1. So weird how the chart works. That intersection at $1 seems in view, and then it's beyond that. It's just kind of whatever. So why can't it wave up again? Just go. I mean, we could do measurements, but That's the 50-50. That's the middle. I think that's correct. You can see that this is where the breakdown was, the weakness to come low. And then this is built support, distributed through at 50-50, and then it's coming back up on the wave. Timing-wise timing is always kind of a beast, I suppose. But, I mean, it would have already been timed out to get there. Like, that's where it crossed. I would have said it would have gotten there on like March 18th. So at this point, the wave it's a triangulation. It's a good triangulation for a pivot, but it's ultimately just going to get there when it gets there. We could use maybe some in-out trajectory business to help estimate it from where the bottom was on that spring. Looks like today, tomorrow. I think we said that on this. Like, it just looked like today, tomorrow. And it's going right now. Yeah, it just popped. Like, I don't know. This is always weird when you come across a chart and you're like, oh, well, it times out to now. And it's like, well, how would I mean, obviously it can't be right now. You got 2 minutes left in the day. But that's where the chart targets. I don't know. So it's like, I don't know how to deal with that. It's hard to say, man. It could get up to 160 on a rotation, full rotation. It may get up to 160 by like Friday, $1.60 that is. %86 upside possibility on AGH. Let's see if I can squeeze an order in, but I doubt it. It's going to work out. I don't have any time in the day left to order, so. It says buy orders are not allowed for this security. I can't buy it. For whatever reason, it won't let me. There you go. I don't know why, but I can't buy it. That's ridiculous. All right, well, I can't trade this. Which is weird because it looks like I don't know why I can't trade it. I just can't. All right. Well, that was a pretty big sell-off in a day. Kind of ugly looking. I think a lot of these just kind of try to sell back down to these supports. You see they're trying to drive the price back down. They all punched resistance a bit, but then they're kind of selling back down to support. And that's a mixed bag of thoughts there. I never like wicking above a creek and closing below it, which is kind of what we're seeing. It looks almost perfect right here. This look call out on my part. I wish it were better in my positions. They're not growing at all, so I'm kind of screwed. But this looks almost perfect. But the problem is that this is a wick and a close below the creek, and I don't like that. I'm not a big fan of that. So it is punching resistance. I don't know why it won't let me trade certain tickers, but sometimes it just doesn't let me do it. I mean, if you're just kind of glancing at this looks pretty ugly on SPY. But I think that massive volume candle at the back end of the day on that really small 6-minute time frame is kind of interesting. That's a pretty big candle for such a tiny movement. It really didn't go anywhere. I don't think this made a lower low. I'm a little concerned that it dipped beneath 567, but this is a 6-minute chart. It's a very low time frame. This went to 566.61. And this went to 566.68. So this actually made a higher low on that massive candle. The pushed resistance, came back, held a support, pushed up. This is a preliminary sell-off right here. It did come below that, so that could be a problem area. But this looks lower too. I don't know. This is where it broke out. It just looks like a series of higher lows on this elevated volume. I'm going to be curious to see what happens. I'm not sure. Part of me looks at this and I'm like, ugh, because I'm like, well, that's a really high volume top, if it is a top. And that just makes my stomach sink, because I'm like, well, if you come back down, it's going to come real low, you know, potentially. Then another part of me is like, there's nothing really about that by itself that looks horrible. It held its support here above. It didn't sink back through, and then just made higher lows on the backups. I don't like being insecure about it, but that's how I feel. I'm like a little bit insecure about that motion. That's just moving now. It's going way up. IWM looks a little better to me. I feel a little bit better about it. But I gotta go look. I don't know, it just looks different. I think it's because it's just more of a natural consolidation look. This is not particularly strong. Let's take a look. Yeah, it's kind of the same deal. It broke out. It held a support at 205. There's another support right here at 205.75. That definitely broke down. That could be a sign of weakness if it distributes. But otherwise, it's up. I mean, that to me looks like a positive higher low. And then same thing here, positive higher low. And you'll see that the volume is not... This is obviously elevated all throughout. But there's a high volume on this bottom. And I don't see the volume in that top. I see the volume in the sell-off. So that tends to be better for us overall. I'm just saying. Like the highest volume here is coming off the top here. It's selling off at 206.96, which makes sense because it's coming down off that creek level or that ice level. So I understand why that may have been knocked down. And I think there's the same motion here. Can I talk about GME, please? I mean, I already talked about that pretty extensively. I can't timestamp it, but I did go through it all. I'll try to hit it one more time before the end of the day for you. I know you guys can't see that when you come on a stream, but if I tell you, then you're at least aware. I mean, this just looks like a sell-off in the day. That's what it looks like, but I think even if this were to sell off again, I think we'll have to see. Extended hours is kind of a bummer for a lot of people, but we probably have to see it come back up to 207 or something and sell off again. And that could happen in extended hours, but it'd have to be like a double top motion right here. So, it still looks okay. I think this second sell-off that happened into the end of the day here is powerful. I mean, it didn't budge. it did sell from the same level. That's a concern. So it's both times it sold from this marker here. A high volume sell-offs begin right around 206.80. So that's going to be one to watch. And I mentioned it a minute ago, but I think that was likely anyways going to be a stopping point, because it would have been what I marked off as the first stopping point, like I did for SPY, because that's the ice level that I have. That's the rising support over here. It's got to puncture it and then go through it. I am happy how high this came. I just wish it had come back above 208.34. But we went pretty far, didn't we? I don't even complain about it. 207.68 is pretty good. And I mean, that's higher than these two tops right here, which were done. This one was a regular trading day. You probably wouldn't have seen this on the regular chart. So this one actually looks pretty solid. It came back above this, which is good. Quite a bit even. This is the next one up, which is the 208 marker here. And I did not breach that. The reason I'm talking about these guys in this particular case is when you're looking at this, the 208 was kind of a clearer path. Like, that was the one that I thought was more of a given. I had marked it off as a first sell level for me because I'm like looking backwards and it's just very clear to me that that's obviously what was happening. I'm happy to see, if you go back to March 3rd, notice it pushed up above that floor. So if you go back to March 3rd, there's a floor right here. I don't know exactly where it is. It looks like 207.50. I don't know where that is. Let's take a look. I don't know. It's too small. I got it on 6 minute. So I can't easily get to the wick. 207.42. That was pretty close. It's a penny off. So I am happy to say that it did push above that. So we did push resistance. That's where that support was built and then was ultimately like distributing, and now we're pushing it again. Some people look at that as a bad thing. Think it came up too high, it's going to sell off. It really just depends on whether it drops the creek, in my mind. And that hasn't happened yet, so yet. You never know. Could be celebrating today and lamenting tomorrow. But I'm inclined to think this is going to continue up and head up to those levels. And I'm thinking it gets there even by Friday. Very possible. It's pretty darn close to what we called out. Pretty darn close. All right, GME, one more time. I'll go to the hourly chart. It's kind of like AMC in that both of them had a run that extends a lot of their indicators, but not giving them a lot of space. Like, they didn't really go very far, right? Their indicators went really far. There's on both of them a divergence that's kind of bearish on low time frames. There's a low time frame bearish divergence on both AMC and GME. It's present on both of them. There's downward motion here locally on the last couple peaks. For AMC, it looks like it's going to not come back through the ice, is what I was saying. It looks like it's going to come back down and probably retest the floor at 296. That goes back to, again, hearkening back to that March 3rd period, which is very similar to what we just saw here on IWM. Granted, if it came back down on to the March 3rd period, would we say that IWM comes all the way back down to retest 203? Well, I don't know that yet. I don't know if it's going to make that kind of a deep retracement. It's a bit of a mess because there's certainly possibilities. They're kind of slightly off, all of them. One of them's on like the 3rd to the 4th. AMC looks really like it's on the 4th as the floor. GME, even a little bit more different, has a bottom on the February 25th, and then it goes to the 4th. But I wouldn't have said maybe that the 4th was necessarily the actual support zone. I think that what we see is it balanced out to the 7th, and that ends up acting a little bit more like, which is slightly higher, which is 2350. And then prior to that, this wasn't really indicative of any support. When we look back at the actual March 3rd date, that's up here at 2428. So, you know, are they one-to-one? Are they working in tandem? I think it's close. I don't think it needs to be exact ever. That makes sense. But I do think that this is probably the area where the gap is at 24. It makes the most sense. And then probably 2350. Just keep it simple. So if AMC were to go back to that support area, GME probably wouldn't go very far. It'd probably only go back to 2350. But that implies that it's not moving anywhere. It's like dead in the water, right? And there's nothing really else here that's particularly bearish except for this top. That's it. Everything else about it, the top and the gap perhaps, you know, the gap down below, everything else about it looks okay. It looks like it's missing like an extension to 24. It doesn't have it yet. Didn't really push up there. Got stuck at the gap. I would suggest that if it's going to be bullish, that we might see it come back down and retest 23.5. If it's going to rally into Friday, it might be a little different than the rest of the market, but if it's going to rally into Friday, I would prefer to see it come above here by the end of the week. If we're going to go backwards and get this gap, then, you know, that could really be all day tomorrow, coming back really low. And it did jump a creek that did not test very thoroughly, and that would be substantially low. That could be all the way back to right around 2260s. Again, that's not a bearish move. It's just coming back down. I just don't find that's incongruent, right, with what we see in IWM and AMC in terms of how far down. Because it would, in theory, make more sense to find the support there. Is there that yellow line coming down looks like an angled support line, and that's why I'm kind of eyeballing it, but it's missing that motion up. So, I mean, it could be more dramatic where we get this kind of early push Friday, market's looking really healthy, but it just doesn't go very far, and then we dump down and hit this on earnings, you know, at the top of the gap or something at 2230 earnings, and then it just rockets. You know, this is sort of typical of AMC and GME. They do these weird alternating moves. I'd have to say it's probably at an angle if I were to pick something. So what's the bottom line here? The bottom line is that it's not really a buy anyways until it gets above 2450. So, and even then, I'd say if you look above it, the 2460 region is even better. So it needs to push above, find a support at 24.5, find a support around 24.6. Then it's in a buy zone. It's out of its creek. It should immediately move up. This is a triangulation on my part. It should immediately move up to 28 to 30. I really think it's going to make a big pop to 25.60, probably come back down, and then go again. But this is all almost like it's almost irrelevant whether it comes back down. I don't care. I don't think it matters. I think if it came back down and double bottomed even, I probably wouldn't care. I'd be like, okay, it's still going to go up. So it's to me, it's almost a given, in my opinion, that this is likely setting up for a reaction back to the upside at this point. That's my opinion, okay? And it is between the ears. It just hasn't made the move. Iteration 1, iteration 2. Iteration 1 dropped lower on that M. Iteration 2, you need to see it hold up higher. So these would be great spots because they'd be a higher move. So I know it looks like I got a lot going on here. I know. But I genuinely think it almost doesn't matter. Like, what I'm really looking for is potential pullback zone could be as low as 22.5 area. And then from there, I think it's bullish. And if it jumps early, it jumps early. We don't have to worry about it. Got it? Okay. We might be missing an up thrust or two. That's my only major concern right here. We might be missing like a push against resistance. That would be like a fake out movement into Friday. If the market rallies into Friday and GME only goes, hear me out. If the market rallies into Friday and the market, let's say IWM, your small caps, end up at like 214 plus, and GME is only at that point, like 24.5, then I'd be pretty concerned about the possibility of a rug pull into earnings followed by a big reaction. I know traditionally we have run up into earnings. I know that happens. It's just an if-then statement, like one or the other. Flip-flop them, it doesn't make any difference. Goes down first, then up. Goes up first, then down, then back up. Really makes no difference to me personally. It makes a difference to people who want to call me out on stuff. But like it really makes no difference because in any way, this would be a higher low. And it would make sense if you push resistance already to back up to that level and then push, jump the creek at earnings. And it'd be a pretty magnificent run from there. So complete the S curve, build out here, then do another one and pump up. We'll see. I think the S curve is going to be a big part of this too, because if it's really shallow and it only comes to like 24.5, that dramatically changes the possibility here as well. You know, if we only get up to 24.5, then the second curve, and then it drops back down, I think the second S curve is probably more distributive like we originally thought, and it only hits that 28 mark. So I think there's a significant alteration there that would happen potentially. But that's the original mark anyways, so who cares, you know? I haven't said that it would necessarily go way beyond, and I just said that that's likely where it goes first. So a deeper pullback here to me signifies perhaps that it only goes to like 28. If it pops early on Friday and finds a settlement, you know, above 24.5, especially 24.6, then I think we could have a chance of pushing 30. Do I think we're going to see another squeeze? Yeah, in June. I think it's very unlikely we're going to squeeze. The market-wide squeeze is going to happen now. I don't know how many times I've said it, but I've said it like a lot. The big picture for me is not. Let's put it this way. It's not linear. Like, it would be easy to say it goes like A, B, C, D, E. It's never going to be like that for the most part. Has GME had moments like that in the past where it kind of just keeps going? Yeah. When GME squeezed, I think this is maybe where we come to an impasse in our talks, because I do agree that there is a very strong likelihood that this has some serious consequence for the future right now. And I've gone into heavy detail about this, right? When we look at GME versus AMC, a lot of times we think that they're pretty much like 1-to-1, right? That's just the way we look at them. The reality is not quite that simple, okay? In October through January, this is the period of AMC right here. See when this is setting up for this big motion? I mean, this is it, right? You go to AMC, look at the same time period here, September 2020 through January 2021. We went through this kind of extensively earlier, but I don't want to keep going through the same things. But like, this is a little more like a comparison. Okay. And I just want to point out that there's a subtle and distinct difference between these two stocks in this particular way, because just like we were talking about with the market versus AMC, GME versus AMC has also been historically different at times. It's not always exactly the same. And when you look at September, when you look at September of GME and AMC, this is pretty interesting to me because I look at this kind of stuff and I'm like, oh, well, that wasn't the same, was it? No. When the squeeze finally started in January, AMC had already come down into a spring, and we were talking about this earlier. This is the motion that we're making now, and I think we're potentially in this particular pocket right here. In terms of like where we are with OBV, it's pretty straightforward. It doesn't seem to have made that big drop yet. It's just missing. It looks right, but it's missing, right? It looks like it's close, but it's missing. When you look at that versus what you see on GME in that same time period, it's kind of very different, right? Like this is the same, roughly the same time period. There's a move up that happened, I guess, early September that GME like crossed up its creek. I mean, it was already like going. You can see that backup right there that happened. It's going, right? It's an SOS. What would an SOS look like now that leads out into a run in, let's say, June for GME versus coming back down? I think it's right here. It's in this pattern that we've already analyzed. Like we have the downside motion here with the curve down. We have the upside motion here with the push up. So both of those seem very possible to me. Does that mean we're at a low on GME? It could be. It's frustrating for people because they don't want me to be wishy-washy about it. But the truth is I just don't know. And that's all there is to it. Could this build out and go into an SOS right here? Yes. Do you see the wave up that goes up to like the 3740 area? That is a potential like sign of strength region. Do you see this motion over here in July above 45 as a potential SOS area? Like we'd marked these off already. So it may seem a little bit bonkers to people to be like, well, you're not being really clear about which is going to do which, but I don't know. If this goes above, could it go up here and start like chopping up, generating like SOS kind of momentum to the upside and then still take off around the same time as AMC? Yeah, why not? I mean, why not? It totally could. This S-curve measures out to May 2nd. I'm not saying it necessarily goes way higher. I'm just saying like that could be an SOS right there of this local region. This is a top. One sign of strength, another sign of strength, and then you're gone, right? May going into May 14th, and the break up, and then the pullback on, again in May. It's like, guys, it's like right there. It's totally possible that GME just never comes back down again after this earnings. But it is situated in a place where you can see there's a critical junction. This looks like a lot of nonsense, I get it, but it's pretty well measured. I think that there's a critical junction right here. And I think if you see the cross up and over going into April, this becomes a very bullish signal. Like it's very straightforward. The M cross will not jump over if it's going to go down. It's very unlikely that you're going to get a fake out and then another fake out. If it stays flat here into April and drops back through, you're probably going to go down pretty low. And it's going to be following more or less an AMC model at that point. If it breaks up, and maybe more traditionally what we see with GME is that it just kind of takes off and goes. So when I say, do we see a squeeze right now? Well, from now until it's all a squeeze motion, like you would have looked at this and said, this is not a squeeze. But if you check out what's going on with the volume, it is a squeeze. Like the fact that this is pushing away from that high and then you're getting this massive hike in on balance volume here and then a massive dump in on balance volume here, that's a really significant zone for it's building out a squeeze is what I'm trying to say. Like for sure it is. then the latest move possible is taken on AMC. So if we see this motion happening on GME where it's building out, I would say that that's, again, very similar to what we see on the larger market. So the comparison would be that during this time period, GME had made this like advancement and was starting to do this kind of crazy like advancement stuff, right? Until this date. And then it just goes, and it goes all the way to its top. Remember? So if you were drawing like a comparison between the two, you'd say that happened. And then there's this kind of like second reaction way over here. I don't know. This is not quite right. But it goes all the way to the top, near the top again. And remember, it didn't ever come higher again. It just kind of came back up. There was a secondary squeeze motion right here, like after the fact in June. Right? May to June. There's no new top made. It's just like a double up thrust that happens. So huge pumps, right, in GME. And that took months and months and months. I mean, long time. It spends up top. But there's never a second run. So, you know, anybody's guess in terms of like when that happens and how that happens. But sure, if it goes up now, maybe then the way this happens is it goes up really quick and it hits the tops early, and then there's long secondary actions taking place until February 2026. I mean, there were three distinct actions, and then it finally breaks down. And we could definitely see something similar to that right here, where there's kind of one big action here in June, and then the rest of it's kind of like secondary actions. Again, I've got it going later, but that's based more on the idea of it going down first then up. This could certainly be a situation where it squeezes and then drops really low back to like 46 and then comes all the way back up again in August. It's just kind of messing with my head because we were thinking about August being like another breakout period for AMC. I'm going to have to double check those things. And October as well. Because remember we were doing that on AMC earlier and it was like, oh, those are timed out kind of different. Like it's like a pump here and then another pump. Yeah, so it's like a pump here in June, another pump in August right here, and then another one kind of after November going to the end of the year. So 1, 2, 3. 2 really starts in August. 1. This is kind of backwards. 2. So AMC is going down. GME is going up. May hits. The 14th hits. We're at our lows. We're at really low spot on AMC. And then it rockets like to the moon during this push on the 28th in May. I don't know about this reaction though. But then there would be 2 more pushes. August to November and then a final January push here. It's really slow. It's probably just the way I have it drawn, though. Yeah, I think in theory that makes sense. Because it would probably bury it beneath this top. They wouldn't want it to go above the top very long. So you get some kind of distribution and a 50-50 around the top. And then a final push here. I'm curious about this little guy. So I still think that leg up is where it is, but maybe it does build out slower at the very end. Could be different. Like that. Some kind of a final move up. Especially if it finds support here, like in December. That'd be interesting. Anyways, yeah. So could GME be in a motion where it's about to start squeezing? Yes, but I think that ultimately, like, you'd be looking at this in stages. It doesn't matter if it goes down first or up first. I don't think it takes off until May. Not likely. Sell everything and buy GME. I'm never going to tell you to do that. But yeah, I mean, if I saw that signal break here, if I saw that, I might consider it. Because it's very possible this could be pumping up. I don't think you're going to get both moves, necessarily at the same time. But I do think it's very possible you could be pumping up here while GME's or AMC's slumping. That's what happened last time. And then they both end up moving pretty much 1-to-1 together. Starting, in this case, I think we're going to be starting in May. I don't know. On the bottom here, this is a 700% move. It's a huge move. From where we are now on GME, I don't know, 2380s. That's 1,000% move if it goes up all the way to the top there. Could be 300. I think on average, I'd still say it's about the same move because I would say 200 is more reasonable. That blue line. Both are like a 700% move. Interesting. Okay. All right, I'm done for the day. I will get back with you guys later. And well, we'll talk to you tomorrow maybe. If not tomorrow, then Friday.